Ladies and gentlemen, we are starting with the summit. May I request you all to kindly have your seat. Everybody who is standing at the back, you all are humbly requested to kindly occupy your seat. Thank you. Good afternoon, distinguished guests and all the delegates. Welcome to Mint Startup Icon Summit and Awards 2023. I am Namrata Sehrawat and I'm delighted to be your host for the day. Can we start this summit by bringing some energy to the room and putting our hands together? Let's do that. Wow, thank you so much. Well, this is our second edition of Mint Startup Icon, which is themed at India racing towards 250 unicorns and brings focus on a different path to light that upends convention and crafts a new vision for the future. Being the world's third largest startup ecosystem, India produced 21 new unicorns in 2022, 3 times more than China, which is ranked as the world's second largest startup ecosystem. In the period between 2015 to 2022, the startups have grown manifold, from mere 417 to over 86,000. And not just that. In fact, the fundings for startups have grown by 15 times. So growing at such a massive rate, the registrations for new startups will continue to rise. Given that India is among the top 5 sought-after places to start a business, and in fact on the verge of becoming a global startup hub. So while the ink is being spilt on embracing the figures, lesser attention has been paid to the real tools, to the real odds of thriving in this highly competitive environment. So today, ladies and gentlemen, we have brought together the industry experts, thought leaders, and entrepreneurs who will be sharing their valuable insights and experiences on how to navigate through the challenges of building and scaling up a startup in the ever-evolving business landscape. So brace yourselves for an incredible lineup of speakers and panelists and the much-awaited Mint Startup Icon Awards, which will be later in the evening. But before we proceed any further, we would sincerely like to thank our sponsors, whose valuable contribution and support has made this event possible. So please put your hands together for our presenting partner, Hewlett Packard Enterprise and Intel, mobility partners Samsung and Microsoft, retention partner WebEngage, and session partners Alibaba Cloud and Slack. Thank you so much for all your support. And now, before we proceed, we would request all of you to do one thing. You know, we all live in an age of digital revolution and social media. So we would love to hear your thoughts on Twitter. So we would request you to keep tweeting live with us using the hashtag #MintStartupIcon2023. And please do not forget to tag us at LiveMint. On that note, we will kickstart our proceedings with our keynote session on India to be a global startup hub. Now, to enlighten us on the same, I would like to call the man who bestows the room with this contagious energy and extensive knowledge. Ladies and gentlemen, please join me in welcoming Shalil Gupta, Business Head, Mosaic Digital. A very warm welcome to you, Shalil. Well, this is a session right after the lunch.
Yeah, it's the most dangerous session, I could say.
The graveyard session.
Thank you. Thanks for the introduction. Good afternoon, everybody. Okay, I could hear 3 good afternoons from the front table. Rest of the people are still in the lunch mood. Let's try once again. Good afternoon, everybody. Okay, this side was very good. Let's try this way. Once again, 1, 2, 3. Good afternoon, everybody. I mean, this side never had lunch today. Okay, guys, I think last 1, 2, 3. Very good afternoon to everybody. Thank you very much. See now the energy of the room today. And I think in next 15 minutes, I'm going to take a travel of a journey where how India could actually become a unicorn 500 country. I think that's the journey. If you look at India's next tries with destiny, I think I'm nowhere comparing myself to drive a discussion which Jawaharlal Nehru drive it. I think today, it is the next tries with the destiny which we are talking about. Now, obviously, any guesses? A lot of founders here. Just raise your hand. People who are founders here. Okay. Investors? Yeah. Any guesses? The first unicorn in the country? Anybody? Sorry? Tata, which Tata? Sorry? Okay. InMobi? Somebody said. Any more guesses, guys? The first unicorn in the country. Can you give me a year? Which year it would be? 2011. Okay. Any more guesses, guys? This side? Come on, guys. I mean, first unicorn, we should be knowing it. Hindustan Unilever. Okay. No, I'm sorry. It's not. Can you guess now? Yes. Who said IPL? Please give the big hand. Please give the big hand. It is the IPL, guys. That's the first unicorn in the country in 2008. And now a decacorn, by the way. Much more than a decacorn. I was looking for a word which could describe IPL bigger than the decacorn. Could not find. It was in 2008 IPL became. Why? The audacity of scale. I think the disruption which IPL brought in was not for one day, 1 year. That was the scale we looked at from a global perspective. It was imagining the new experiences. I think today in this room, there wouldn't be anybody who wouldn't be probably favoring one team or the other. And this team is all global. Players are all global, actually. International inclusiveness. Something which we created in India, we scaled in India with international inclusiveness. Never been done before. And if you look at the popularity quotient, I think there is probably nobody in the country who doesn't understand what IPL stands for. IPL has been taken as a model and been replicated in various other countries, right from India to Bangladesh to other countries as well today. That's to give you a starting point. Why India is a unicorn, why we are thinking about. Today, we are looking at 115 unicorns. Why we created 115 unicorns? It's the economies of scale, the consumption patterns, the population we have, the reach we created, the digital platform and the infrastructure we created. And we use that infrastructure to drive the scale for the country. These are Flipkarts of the world. And I'm sure everybody in this room today understands how Flipkart actually scaled. These companies today is 115 unicorns. It is estimated that we will be at 250 unicorns, the principles of zeros. And we talk about principles of zeros. Last year when I was standing on this stage, we talked about principles of zeros. And we, adopting the principles of zeros, I'm sure the startups will reach to 250 unicorns in the country today. But if you look at 2030, we are looking at 500 unicorns, highest, the second highest in the world, in fact. We are doubling the achieving escape velocity, which means today we are standing on the third place, US, China, India. And I want this 500 number to be beaten much earlier than 2030. But if you have to beat that, is it a feasible or a dream? I think if you look at the first, 24 unicorns created last year, having said, everybody talked about funding, winter. I think there was nobody who was not talking about funding winters, but we have 24 unicorns created last year. 5 years for 43 unicorns to achieve the status, which was earlier 10 years. On an average, we were looking at unicorns created in a 10 years time. Today, on an average, it is 5 years. And 1 out of 13 unicorns globally from India. That's a massive scale which we build up. The flow of the money. I think $25 billion in capital raise amidst the winter. 200 plus unicorns in the waiting. And if you look at 3,000 plus funded startups each year, that's how the funding has been happening. That's the money flow which is now taking place. If you look at the the DNA of engineering. Why? 85% of the unicorns founders are now engineers. It's not coming from the business side. They are looking technology very deep and using technology and leveraging technology perspective to make a global scale of it. SaaS is the largest unicorns creator now as a platform. If you look at 65% of unicorns from enterprise tech, which has an international scope. See, if I look at the factors of change, and if I look at the 500 club drivers, I think it's very simple. We are looking at 2.5 years each startup can actually become a unicorn. They can reduce the 5 years average time of you being a unicorn to a 2.5 years. 50% less time to achieve that status. Enterprise tech valuation is not India. Most of the people and investors I've been talking about, they don't look at India as a market. They look at global as a market. And that's how the funding and the valuations have coming starting. Speed, GTM has a quadrupled. Today, I think probably if you look at some of the SaaS-based players, they are disrupting the major players in the major economies across the segments. Across the segment, SMB segments, mid-market segments, and enterprise segments. Across the globe. These are some of the players which have been probably born and now are international players. But if you look at 24 new unicorns, the principles of zeros, right? These are the unicorns which we created. And last year what we said, these principles of zeros means that talent, zero tolerance of not having a great talent in the company. I think most of the founders, we were talking last time, they were saying, the only war which we are fighting is the talent war. We need to get the talent in the company. And today, I think they're winning. They are winning. Left, right, center, they're winning. They're getting the talent there. Wait time for delivery. I think Blinkit gave us the example. It's just wait time. If it happens for any founder which says that, a guy would be standing on your door every time you ask for it, that's the way they're looking at it. Zero wait time. And zero tolerance of not innovating. I think most of the startups have been pivoting themselves. They have learned their lessons in the pandemic era. They have pivoted themselves into various other businesses. That innovation hasn't stopped in these startups today. Zero tolerance there as well. They have zero tolerance on ecosystem and channels. Any channel is open for them. They adopt the channel faster than any enterprise in the country today. In fact, enterprises I have seen, traditional enterprises have started following up startups. What are they doing? Let me replicate in my organization. And the desire of assistance. The desire of assistance means that automation is playing a very, very important role for most of these funding. Now, if I look at the next wave of unicorns to unicorns, if you look at from a valuation perspective and 4-year sector perspective, these are the unicorns which we are looking at from BFSI, retail, IT, utilities, education. This is how each sector is moving today. I mean, popularly, these are known as fintech. These are also known as health tech. These are also known as ed tech, etc. But today, if you look at from a sector perspective, how the unicorns have been creating, this is where it comes for us. 65% of the solution from enterprise tech and deep tech, and it's really deep tech. It's no more on a surface itself. Today, people are talking about generative API. And in fact, today, people are using those. People have started using in the business environment the chat GPT environment today. Scalability question to the new geographies. Most of these founders I'm talking about, they are not talking about one geography. They're talking about opening offices in various geographies today. Just not selling into customer segment. Sector disruption, the core product. And the scale is experience at the core. Because scale is not being just driven without the experience as part of it. If this is the case, then what is happening? And we call it a decimal disruption. Because what's happening is, if you look at founders today, is not looking at a disruption which is happening at a zero level. They're pushing the dot, the decimal dot, much further on the right-hand side. That scale is being imagined. That measurement has been imagined today. So we call it decimal disruption. The next wave of growth. Look at Blinkit, the Ola Electric. Category disruption. They came, they disrupted the category. Look at deep tech, Freshworks, Gupshup. Deep tech. So that is one another disruption which is happening. The second, if you look at Zerodha, Ola, experience and ease, convenience. Again and again, convenience plays a very important role today, and convenience is charged today. It's no more free. It is more about EBITDA game than actually a revenue game today. For pivoting and scaling, if you look at InfoEdge, Next Data, and if you look at CRED, consumer-focused tech, I think these are the 5 buckets which I'm going to leave it with you, saying that the decimal disruption is the next wave of 500 unicorns in the country. I just hope we are able to create much faster than actually 2030 and be the #1 country on the global perspective of having the maximum number of unicorns. With this, I rest my case. Thank you very much.
Thank you so much, Shalil, for such an amazing keynote and enlightening us with your valuable insights. Can we please have a big hand once again for Shalil? With that, ladies and gentlemen, we are proceeding towards a really fiery fireside chat session. Well, we know how to start a business, but how do we make it a super brand? What is the ideal toolkit for that? What approach should new players follow to make it to the big Champions League? Well, right now we are going to hear it from our experts. And meanwhile, we are setting the stage for our next fireside chat session. I would request all of you to kindly keep tweeting live with us. Keep using the hashtag #MintStartupIcon2023, and do tag us at LiveMint. Also, there is a QR code right there on your table, so please do share your valuable feedback with us. So before we proceed any further, can we please have a mic from that side? So this is a really interesting conversation that is about to happen. What is the ideal toolkit to make your brand a super brand? But I would like to know from you that what differentiates a brand from a super brand? So let's hear the perspectives, starting from this table. Hi.
Hi, this is Vineet Mehta from Alive Health. I'll say just moving from brand to super brand, it is about if you are touching the lives of the individuals in any way, whether it is coming from the convenience, just hitting the right perspective of the life, that is something, and those things will generally help. And that is something at least what we are trying in health. Yeah.
Wow, thank you. Thank you so much. So what he just said is how you impact lives, how you contribute to the society. That's what really matters. Yes, sir. Please introduce yourself.
Hi, my name is Abhinandan. I'm from India Deposit. Difference between brand and super brand is super brand makes decision easier for the consumer. So if we think of any segment, and if we want to buy anything, if we have a super brand in that segment, it makes our decision very easy to choose. That's it.
Wow, that's really insightful. Thank you. Thank you so much for sharing. So with this, we are now proceeding towards this fireside chat session. And now it's time that we hear the insights from our expert. Ladies and gentlemen, please join me in welcoming Sanjeev Bikhchandani, founder and executive vice chairman, InfoEdge. A very warm welcome to you, Sanjeev. To spearhead this conversation, we have joining us Srutijit KK, editor-in-chief, Mint. It's so good to have you here. Handing it over to Srutijit.
Thank you. Good afternoon, everyone. Delighted to be here, and really excited that we have amongst us one of India's most iconic entrepreneurs. Sanjeev is really unique in India in that he has straddled a really interesting spectrum during his career, starting with founding a great and enduring internet company, scaling it, then taking it public, running it very successfully over a long time with consistent results. As you all know, today InfoEdge has a market cap of about 45,000 crore. It had reached close to 100,000 crore. And then moving on to becoming an investor and finding great success as an investor. He invested famously in Policy Bazaar and Zomato very early on, both of which have gone on to become, again, enduring, successful unicorns, great businesses. So I thought, Sanjeev, firstly, thank you for joining us today.
Thank you for inviting me.
Great to have you here. He's among the most, he's treated as the elder statesman in many ways of the Indian startup ecosystem, makes his voice heard on key policy issues. So I'm hoping to chat with him today across this particular spectrum of starting up, spotting opportunities, scaling a company, taking it public, then as an investor, how does he do it? Sanjeev, to start with, can you take us through this journey of when you started in 1997, when you started Naukri.com, what was the situation like back then? What was the internet penetration population like back then? And then onwards in your journey, if you could give us a broad flavor.
Yeah, so look, I quit my job and I became an entrepreneur in 1990. I was 27 years old then. And for the next 7 years, I drifted and did a whole bunch of small things. Teaching, training, salary surveys, trademarks, whatever came my way to survive. I had no big idea. I had no vision. I just wanted to be an entrepreneur. I didn't want to work in a large company.
Are you able to hear Sanjeev well? Yeah, okay.
Okay. And, in 1996, I saw the internet for the first time. And I thought I'd do the 21st small thing. Basically, we took jobs from newspapers around the country and just put them on the net, and we called it Naukri. And traffic began to come because jobs were a magnet for traffic. We had all the jobs from all the papers in one place for 1 month, right? And we're not charging, we're just taking jobs from the papers. And once traffic began to come, we began to charge companies to put up jobs that they had not advertised in the papers. Now, when we launched Naukri, there were only 14,000 internet accounts in the country. With shared accounts, it meant a couple of 100,000 users, perhaps. To me, that looked like a large number, right? Of course, compared to what the internet is today, it was very, very early in the game, right? But we had no vision or anything. We didn't want to run a large company. There was no venture capital, nothing. I had a rough sales target. I said, if I can get 500 companies every month to put up one job each and give me 1,000 rupees for that, we'll do revenue of 5 lakh rupees a month, which is 60 lakhs a year, right? Which would be 5x of what the company was today. And I said, if I do that in 3 years, it'll be a success. So we had no big idea. We did not run a big company. We thought it'd be a small company. We were happy running a small company. We didn't have any capital. As things turned out.
But at that time, did you have role models from overseas? Did you look at global internet companies and think that, okay, one day this could be something?
No, actually, when we launched Naukri, for the next 6 months, we didn't have an internet account ourselves. We couldn't afford to pay for one. It was expensive. So without having an internet account, I would take data on a floppy disk to my friend's house. He had an internet account, and we would upload the site from there. And occasionally, I would see the site from his house. After 6 months, we got ourselves an internet account. No, so I had no global benchmarks. I had no role models, nothing. I was just following an idea I thought could deliver some revenue. So a nifty small idea, I thought. It turned out to be big.
And I remember Naukri was probably among the early companies to aggressively market itself. There was a lot of buzz about Naukri. People knew about it. I think in less than 10 years of you starting it, it had scaled quite substantially.
Well, actually, we listed the company. It went public 9 years after we started it, 6 years after we raised venture capital. So we got lucky in the sense that we got inbound interest, from people who wanted to invest in our company. And I was completely baffled because in all my life, nobody had ever called me up to give me money, right? You always have to chase money. And when that began to happen, that's when I investigated and I discovered what is venture capital, who's the investment banker, what's the dot-com valuation, what's happening in the US. So all that happened after I began to get inbound interest for investment. And initially we said, no, we don't want to, we did a couple of meetings and then we said, we don't want to raise money, thank you so much. Largely because, I wasn't sure, what kind of agreements they'd make me sign. I was happy running a small company. I didn't want to complicate my life and run a big company. But eventually, we raised venture capital because competition raised venture capital. And so we were forced to. And we got lucky because we raised venture capital 2 weeks before the meltdown. So we got the dot-com valuation. But we didn't have time to spend the money foolishly, which we probably would have done had we raised it 6 months earlier. Right? So we were in this, servant quarter of the garage kind of operation, maybe one floor at my father's house, 9 of us. And we raised venture capital, and market melted down. We simply put all the money in fixed deposit in the bank. We tore up the business plan and said, we've got the money. Now let's see how we can build the company. But there's no second round. It all has to happen in this money. So we raised 7.5 crores. And we said, we have to do it all in this money.
How do you contrast that with, you meet a lot of young entrepreneurs today, people come to you for funding. How do you contrast that attitude with the dominant attitude today? It's all got to do with availability of capital. Okay? Companies that tend to raise too much money too easily tend to spend it suboptimally. Money burns a hole in your pocket. If there's a financial constraint, you will make do in the money you have. We had 7.5 crores, 7.3 crores. Market melted down. We said, isi mein karna hai. If somebody had given us 700 crores, yeah, we would have driven a Rolls Royce. Do you, having said that, now you built your own company that way, but you've subsequently invested in very large consumer internet companies who necessarily have to wait for a long time to profitability, where they do have to burn a lot of money in customer acquisition, etc. So you have operated or advised or invested in companies with very different approaches. What are the relative merits or demerits in these?
See, the environment is different, right, today. Simply because ever since the global financial crisis, till about 1 year back, the Fed has consistently printed its way out of trouble, right? Post-COVID, I think $5 or $7 trillion got printed. All this capital found its way all over the world, in all markets, whether public, private, real estate, whatever, right? Including India, and including in companies that perhaps could have done with less money. But if your competitor is raising, willy-nilly you will have to raise. How do you survive? So it became this arms race. Right? And now companies that are finding themselves with the wrong cost structures, the wrong unit economics, having hired too many people, built up overheads too much, perhaps cost of customer acquisition is more than lifetime value of customer. Right? They are going to be in trouble, and they are in trouble. And if they don't pivot fast enough, and if they don't have enough money in the bank, they're going to be in trouble. And we are seeing some of that already happen.
But what I find interesting is that, in building your own companies, you had a certain disciplined approach, but you were not doctrinaire about it. When you recognize that, another era, another time, another environment of funding availability, companies have to operate differently.
Yeah, नहीं, वो बात नहीं है. हम तो बोलते रहते हैं. लोग सुनते नहीं हैं. Okay.
So it's not intentional, but...
Look, we don't impose, we suggest, we say, we discuss, but finally it's the entrepreneur's call. And if there are 5 investors on the cap table, ours is not the only voice there.
Right. So you do push, even in these companies, you do push them to try and achieve.
Yeah, we keep saying, listen, if you're getting the money, raise it, but don't spend it. Assume this is your last round. What will happen if the market melts down? And we have said it for the last 15 years, but for 14 years we were wrong. Market didn't melt down until now.
You know, I mean, although I'm steering the discussion in a more wider direction, the topic of our discussion today is actually about marketing and building brands. Sometimes I feel, Sanjeev, that a lot of what has happened recently by companies that have raised a lot of money and have spent it on customer acquisition, it is sort of a straight line from a VC, who of course has taken it from an LP, through the through the startup and into the hands of Facebook and Google in terms of digital marketing. So in some sense, it's like pension money sitting in some Western economy, straight to the hands of Google and
whose share price went up and the same pension funds earn money. Okay, it's possible. No, but I'll tell you, see, my first job was in advertising in Lintes, 84 to 87. My second job was in consumer marketing in HMM, now called GlaxoSmithKline. I was working on the brand Horlicks. So I have some experience in brands, brand building, advertising, marketing. And I have a slightly different point of view from conventional people who work in advertising and consumer marketing. So I don't believe it is advertising that builds brands. I believe it is customer experience and word of mouth that builds a brand. I believe advertising is a decent awareness builder. Advertising is an accelerator. So advertising will make a good product succeed faster. It will make a bad product fail faster. Right? And therefore, we focus a lot on product features, innovation, customer experience, and we do some advertising. Advertising for us is more a defensive thing. It's not an aggressive thing. We are largely focused on customer satisfaction, user experience. We believe that's what builds a brand.
But has digital marketing become too expensive? Like, one of the consistent challenges we hear from founders is that your cost of acquisition has now gone up so much that the economics are not working out. Like, to acquire one, especially with SaaS companies.
So the question I'll ask you is that, are your existing customers coming back on their own? If enough of your existing customers are coming back on their own, it's a sign of a brand and product that's working, and customers are sticky. Right? If customers are not sticky, they're promiscuous, you have a fundamental problem in your value prop, in your product, in your user experience, in the fact that lack of differentiation from competition. Right? And that's what you should be focusing on. So high customer acquisition cost is perhaps a symptom of your product not being sticky.
What are the challenges of scaling?
I think scale is, if you look at the 7 or 8 things that give a company scale, number one is enough customers have to want what you're selling. If there are enough customers out there who want what you're selling, the market will give you scale. Right? If you have to push really hard to sell to a few customers, you simply won't get scale. So number one. Number two is certain types of businesses scale faster and larger than certain other types. In general, services are harder to scale than products. In general, self-service scales faster than you having to serve the customer each time. Right? So there are 4 or 5 or 6 traits of business at scale. Right? But if you're talking about scaling an organization, as an entrepreneur, I think most first-generation entrepreneurs, when they are small, they tightly control everything. Right? It becomes your natural style to, I'm the boss, I will tell you what to do, and that has to get done. But talented people want to be empowered. They don't want to be micromanaged. So scale is also about letting go, but to the right people. If you let go to the wrong people, you have a problem. If you've got the right people and don't let go, they will leave, you have a problem. So you need both, letting go to the right people. And then processes, systems, all of those things.
How do you, what advice do you give to founders who are in the process of scaling really fast? Because one of the things we've observed or, has been subject of comment is when you're scaling fast, you tend to ignore some processes, some corporate governance norms, like, compared with more conventional companies where these controls and processes are really, really strong. So do you advise them to pay attention to those things as well?
So first of all, we say, look, don't be in a crazy hurry to scale. It's okay to scale slightly slower. And I would even tell young entrepreneurs that, look, it's okay to not scale. It's okay to run a small business as long as it's profitable, defensible, sustainable. It's okay. Right? Of course, if you take VC money, you have no choice but to scale, because the moment you take an investor's money, you've given a promise that you will scale and give X return. So it's okay also not to raise external capital. Right? But let's say you raise external capital, you have promised scale to your investor. Otherwise, the investor would not have invested. Then you're obliged to scale. Right? Now, unfortunately, some businesses may take 20 years to scale, but it can still be a very good business. Right? But, your VC will say, look, I have a fund that I want to exit in 8 years. So by the 6th year, I really want an exit. And to give me an exit at the return I want, you have to scale this fast. And that may or may not be a good idea from your business's perspective. So you need to marry a number of things to figure out, should I scale? If so, at what speed and how much and in what fashion? And definitely you must speak the truth and be a well-governed company no matter what happens. It's okay. It's better to miss your targets than to lie.
Are you disturbed by what we've seen in some recent instances where people
It is disconcerting. But having said that, I believe it's the exception and not the norm. Right? So we've invested in about 80 startups over the last 15 years. I cannot think of more than 2, maybe 3, where something wrong may have happened. We have not got the evidence. We just suspect. Right? But by and large, I think most good Indian educated middle class first generation entrepreneurs are honest.
Let's, I want to talk
that is the way they were brought up, by their parents.
I want to talk a little bit about Zomato. Now, I happened to cover this company first back in 2009, I think, when I used to work for a website called Content Sutra. And they were still called Foodie Bay, and I had written an article. And I remember talking to Dipinder at that time, and they told me about how they were preparing a pitch deck to raise $1 million. And from that, we've had the satisfaction of seeing the company go to a decacon. But you are somebody who invested in, Zomato back when it was still Foodie Bay. What led you to invest in them?
So we had begun to invest in startups maybe a year after we went public. We went public in 2006. We had begun to invest in startups in 2007. So we did Study Places, Policy Bazaar, Merit Nation, maybe one or two more. Around 2010, so Foodie Bay was a site that I was using. I liked. My son and I used it. My son's a foodie, I'm a foodie. And there were many restaurant listing sites, but Foodie Bay was the only one with all the menu cards, right? And that is what we found useful, that you could go to the site, see which restaurant, what's the menu, what's the dish, what's the price, okay, what's next door, or in the same market, or not far from there, and what's the menu. And then you could take a much more informed decision about where to go for lunch on a Sunday or a dinner on a Saturday or whatever, right? And I really liked that. And Hitesh Oberoi, who's the CEO of Infoid now, he spoke to me, says, have you seen the site Foodie Bay? I said, yes, I use it all the time. Isn't it great? He said, yeah, it's fantastic. Even I'm using it. How come you've not looked at it for investment? And the penny dropped, and I said, yeah, why not? Right? And so I went to Google, and I did I went to Network Solutions, and I did a Whois search. And on the Foodie Bay domain name, the admin contact was somebody called Dipinder Goyal. So then I did a Google search on Dipinder Goyal, and I found an email ID somewhere. So I sent a cold email saying, are you the same Deepinder Goyal who's launched Food eBay? Well done, can we talk? And I gave my mobile number. And Deepinder initially thought I was a Naukri salesperson trying to sell him something. So he didn't call back for 2 days. Then by the third day, he sort of did a Google search on my name, and he said, no, he's probably calling something else. And he called back, and we met, and that's how it happened.
And that's a sort of, in some ways, the Warren Buffett model of investing, where if you're using a product, you like something, and
Yeah, that's not the way I thought, but that's how it happened. Yeah.
Can you tell us a little bit about some of the investments you made in those days that didn't actually work?
So we invested in Merit Nation. See, first of all the entrepreneurs we invested behind, we have thought they were great entrepreneurs, very good entrepreneurs, very hardworking, very committed. Sometimes businesses didn't work, various reasons. And we admire and respect all entrepreneurs because, see, an entrepreneur risks his life or a significant part of his life or his career, right? When he's chasing a startup for 10 years and then it doesn't work, right? So you've got to respect that they tried, and they tried really hard. And they were good, but it didn't work, right? So we exited Merit Nation at a haircut. We wrote off study places. We wrote off 99 labels, all good entrepreneurs. But it didn't work out for various reasons.
Let's come to the...
and they're still friends.
Sorry?
We're still friends with them.
Let's come to the topic that's foremost in many founders' minds today, which is about what we call the funding winter. Is there a funding winter?
Yes and no. Right? If you are at a very high valuation and you got the wrong unit economics and there's no path to profit, you burn a lot of cash, there is a funding winter for you. If, on the other hand, you are growing well with the right unit economics, trending towards break even, right? There is no funding winter. There are enough and more companies in our portfolio who are getting inbound interest. You don't have to go out to pitch. They got investors coming to them. So yes and no.
In the public markets, in the stock markets, the view now is that even if foreign investors are sort of pulling back, domestic capital has come in such a strong manner, it sort of offsets it, and our stock markets no longer crashes the way they used to back in the day during taper tantrum and so on. Do you see that phenomena taking root in Indian startups and private funding anytime soon?
No. You see, venture capital is a high-risk sort of asset class, right? And Indians, by and large, and it's illiquid and it's a 10-year, 12-year time horizon. So not enough Indian pools of capital are comfortable with illiquid investments of that time horizon with this kind of risk. And therefore, even today, 95% of risk capital, of venture capital and PE in India has come in from overseas. And Shivani, would you agree? Yeah? So you talk to any venture capitalist, we all know that most of the money has come from overseas. So overseas capital is really important for the venture capital industry. Because of course, it's a lot better than it used to be, the Indian capital, but it's still only 5%.
Look, it took a long time for the attitude of retail investors to change. India used to have among the lowest retail participation in the stock markets, but now it very suddenly, during COVID and due to other factors, it did change.
No, so 1 second, understand what happened. Bank fixed all rates went down. Gold wasn't moving. Real estate was in a slump, in a slump. Where do people put their money? They will put it in mutual funds, in SIPs, and that's what happened. Now, things can change. Because if the other alternatives start delivering superior returns, the stock market hasn't moved much in the last 12, 18 months. Things can change. I'm not saying they will, but they could change. Now, for venture capital, see, first of all, retail participation is not allowed in venture capital. Right? You have angel investors, 5 lakhs, 10 lakhs, log karte hain. But typically, the people who do angel investing are investing a very small part of their portfolio in angels fund. Because it's highly, it's uncertain, it's high risk, it's even speculative, right? So you're talking about HNIs, you're talking about family offices, you're talking about some institutions. You're talking about some fund of funds. There aren't that many of them. So
there are not a lot of new family offices coming in, or not enough to make a dent?
So I'll tell you something here. The startup industry, startups right now are going through some stress. The truth is, this is a good time to invest in startups because you're getting better valuations. The truth also is that it is in the nature of human psychology to be afraid of investing at such times. Right? So it's not as if investors are saying, hey, what a great time to invest in startups, let me put my money in a VC fund. That's not happening. There is no stampede. You know, people are not, Shivani, are people beating down your door to invest, or you have to go out and sell? You will be, but LPs, by and large in India, it's hard, right? It is hard.
Unfortunately, it's true in public markets as well. People tend to move in herds and think in with herd mentality. Now, Sanjeev, you screen a lot of companies, a lot of founders come to you for investments, etc. What are the top 2 or 3 things that you look for in founders that you choose to invest in?
So look, when we meet a company for the first time, or let's take Zomato and Policy Bazaar, right? First, what impressed me was, look, value proposition, right? Is this thing going to hit a hot button? Is it going to have customer pull? Is there already customer pull? So Zomato, it was clear that the site was solving an unsolved problem. Traffic was going up every month without spending on advertising. So they were onto something. They were provided clear evidence of what we call natural attraction. अपने आप traffic आ रही है, अपने आप attraction बढ़ रहा है, right? In the case of Policy Bazaar, we invested on a PowerPoint before the product was even ready and launched. Oh, really? Yeah, and basically he gave me, Yashish gave me across the table a demonstration of how compelling the value prop was. So he said, you know, I'm willing to bet you're paying 60% more for your car insurance than you need to. I said, don't be silly. You know, I got the insurance from a dealer. It came along with the car. I've been renewing it every year. It's a public sector company, national insurance company. It's a standard car, standard insurance, public sector company, standard dealers. Kuch standard hi hoga hai, price bhi standard hai, standard policy hai. He says, no, there's huge opacity in the market. And for the same policy, different companies will charge different premium. I said, really? He says, yeah. So he said, give me your details. So I took out my car insurance papers. I had them in my backpack in the office, in my cabin. And, okay, which car, this year, this color, this model, this whatever, driver-driven, you never made a claim, so no accident. वो उसने कुछ किया, कुछ query किया, dial up करके कहीं पे. And he came back with 8 alternate quotations for insurance. And sure enough, the lowest quote was 40% lower than what I was paying. And every quote was different. And I said, wow. I said, if this is the kind of price variation and the opacity, and people don't know, right? Ye to chalega. And we cut a check. So the first thing is evidence of natural attraction, value proposition. Is there a compelling hook around that? Will the customer want this? Second thing was, how good is the founder, how good is the team, how committed will they be? Can they execute? Can they get a good team to work with them? All those things.
Indian public markets have shown a sort of an ambivalent approach to, not an ambivalent, but like, they seems to be unable to make up their minds about tech companies. They embrace them eagerly when a crop of new large ones came into the market. Zomato, Policy Bazaar among them. And since then, the story has tempered somewhat.
So look, historically, Indian public markets have not taken kindly to loss-making companies. Right? Exception being some media companies who in the past were loss-making, but nevertheless had a decent market cap, right? Some TV channels. You were not even allowed to list a loss-making company until recently. Right? Now, given the fact that on NASDAQ, a tech company could go and list, even if it's loss-making, and get access to capital and get a market cap, and Chinese companies are doing it. Right? It was felt perhaps that SEBI should allow new age companies to do that in keeping with international trends. Otherwise, there'll be a huge incentive for Indian companies to want to list overseas instead of India. Argument made sense. And these companies listed and the market accepted it. But when the US market corrected, okay, with a lag of a few months, the Indian market corrected. So it's not as if the Indian new age tech companies have corrected more than their counterparts in the US. Perhaps even they have corrected less, a little bit less. The Indian investor seems to have reverted to the old position of we want a profit-making company. Now, having said that, should the US market turn, you believe, at least the foreign investors will come and invest behind this company, even if the Indian investors don't. Okay? But I think the message for these companies is clear, and they cannot bank on that. You've got to get to profit. And you've got to get profit pretty soon, next 2-3 years. If you want to, get your market cap back up again. Because ultimately you will be valued of a profit multiple. Whether now or 3 years from now or 5 years, you will be valued of a profit multiple. But a profit banao, फिर multiple मिलेगा.
Do you find this going public putting additional pressure on founders? I mean, there are disclosures, quarterly earnings. You're under much more of a public glare.
But that goes with the territory, something. I mean, that will happen. If not now, it will happen 2 years later. If you IPO 2 years later, I mean, you can't say I'll go public and then I don't want scrutiny.
But do you find people being under pressure, or they're all dealing with it?
Well, the companies that we've invested in, Zomato policy, they're dealing with it. See, it's about staffing up, right? If you've got the right people, right, you'll deal with it. Okay? But if you have not, beefed up your team to deal with it, you'll have a problem.
Sanjeev, lastly, a quick one on, one of the issues you've raised you've made your thoughts clear, is about this question of flipping of Indian startups. Firstly, what are the conditions that are forcing or compelling Indian startups and founders to move elsewhere?
Look, there are 5 or 6, right? One is enough and more overseas investors will put a precondition that if you don't flip, we're not investing. Now, founders want access to capital. Without that, they can't run their companies. Now, if that capital is not forthcoming in India, but is forthcoming overseas, they will go there. Okay. Second is, there are probably some tax implications which are different, right? Overseas, right? Third is, I don't want to say this, but enough founders are starstruck by Silicon Valley dreams, okay, which I think you need to get real. भाई आप हिंदुस्तानी हो, हिंदुस्तान में सेटअप है, आपका मार्केट यहाँ पे है. What sense does it make to flip? But you do it anyway. I believe it's a mistake.
But now you see much
more.
See,
the argument is put forward that you want to access the US market, so you must incorporate that. That's rubbish. Infosys is incorporated here, it accesses US market. HCL, TCS, Wipro, Zoho. So this argument that you will not get customers in the US if you don't incorporate overseas is rubbish.
Sanjeev, it's been great speaking with you. Thank you so much for
being here
with us
Thank you.
today. A round of applause, ladies and gentlemen, for Sanjeev Bikhchandani. Thank you.
And Shrutijit, can we please come together for a picture?
And Sanjeev, we also have a small token of gratitude from the side of Mint. So I would humbly request Shrutijit to kindly present the same to Sanjeev. Can we please have it on the stage? Thank you. Thank you so much for such an enlightening discussion. I am sure this would be really helpful for all the new startups to take their brands up a notch. Thank you. Thank you so much once again. So with that, ladies and gentlemen, we have a really interesting factoid coming up right there on the screen. So I would request all of you to kindly have a look at that. Wow, well, that is indeed a very riveting fact. So is funding winter a reality or myth? We will find that out very soon. So meanwhile, we are setting the stage for our next part. As a good compere, it's my responsibility that we all remain energized throughout, and also that this event goes smoothly without any interruption. So this is a small request for everybody who is sitting and standing there at the back, that we are hearing some buzz from the back side, and it's creating some disturbance for the people who are sitting here at the front. So I would request all of you that we will get multiple breaks for networking, so we can chat, we can converse during that. But for right now, we would request you to kindly pay attention to all that is being discussed here on the stage. With that being said, as I said, that we need to remain energized throughout because the session started right after the lunch. So I'm going to tell you one ratio. The ratio is 2:4:2. Anybody here in the room who can tell me the ratio? Sir, it's 2:4:2. Can we all remember it? Yes? Because we are going to do something with this ratio throughout this summit. So when I say 2, all of you have to clap twice. That is 2 times. 1, 2. Can we do that? 2. Let's do that. Only 2 times, all right? And together. We all need to be synergized. We all need to be synchronized. On the count of 3, 2, 1, go. 2. All right, fabulous. So when I say 4, we all have to clap 4 times. It's going to be something like this. 1, 2, 3, 4. Let's do it. 1, 2, 3, 4. On the count of 3, 2, 1, go. Stop. One more time. Stop. One more time. Fabulous. And what was the last number of the ratio? 2. Again, we have to repeat the same drill, what we did in the beginning. That is 1, 2. Can we do that? 1, 2. Together. 1, 2. Fabulous. Now, can we do this entire ratio together of 2:4:2? It's going to be somewhat like this. I would request everyone to kindly pay a little attention. Okay, so I've left my mic. The ratio is going to be somewhat like this. 1, 2, 1, 2, 3, 4, 1, 2. Can we do that? Yes, on the count of 3, 2, 1, go. 1, 2, 1, 2, 1. Stop. Together. 1, 2, 1, 2, 1. Together. 1, 2, 1, 2, 1. Okay, now without my assistance, let's see if you will be able to make it or not. On the count of 3, 2, 1, go. Okay, I'm going to give you a count one more time. Let's see if we all will remain coordinated or not. On the count of 3, 2, 1, again. Fabulous. One more time. Super. Again. I think we're good to go. Well, I think the energy is back in the room, so we can easily proceed towards our next panel discussion. Well, the epic momentum of 2021 slowed down in 2022. From $4.7 billion raised in January 2022 to $1.3 billion in November. The cost of capital has escalated and investors have become more cautious to deploy capital as they were earlier. So is it real? Will it end the dreams of the startups? Will it force startups to brace for another 12 to 18 months before capital flow ease? So what are the best practices in this drought? To share their perspectives and experiences, we have a stellar lineup of panelists joining us up on stage. Please join me in welcoming Nupur Garg, founder, WinPE. Shivani Bhasin Sachdeva, founder and CEO, India Alternatives. Sonali Jindal, co-founder and COO, Ring and Kisht. Bhavna Agrawal, country head, high velocity, growth and compute, Hewlett Packard Enterprise. And to extract all the perspectives and drive this conversation further, please join me in welcoming Shalil Gupta, business head, Mosaic Digital. A very warm welcome to each one of you. I would request you to kindly have a seat at the dais. Wow, we all are looking forward to hear your insights. Handing it over to Shalil now.
Sure, thank you, thank you.
Spearheading the entire female panel.
I was about to say that I should be very happy today, or I should be a little fearful as well. But, I would say, I'm very proud to see all female panelists today. I think usually we always struggle to have female panelists in today's time. So thank you very much for joining. Guys, can you please give a very big hand to all female panelists today? This is an amazing, I want to take a picture and send it across to everybody. Hey guys, we have all female panelists today. But I'm also fearful today, so be nice to me. Okay. But I think it's a very important topic today. Most of the time we are hearing in media as well as across the board, is funding winter is a reality or it is more of a noise being made in the country today. We have seen some sort of peaks and troughs coming in between early age versus late age funding, dry powder being there, LPs getting a little bit more cautious about giving it to VCs as funds. Little bit chain has got disrupted, but I think want to find out from all of you guys today, is this a reality? Is this winter a reality or a myth? There is a uncertainty across, so there are wars and there are, India is being set as a bright spot. Some people said India is an oasis in the desert across the globe. Economies are uncertain, they're not growing as fast as they should be growing. So in this atmosphere, one is startups are all struggling at all stages, whether it's an early age or a late stage startups. Do you find it is true or it is not true? Shivani, I'm going to start with you first and then go to the Nupur.
Sure, thanks. First, I'm very excited to be a part of this all-women panel as well, especially because it seems like it wasn't deliberate at all, right? We just figured that out outside. So, Jalil, thanks. I'm going to pull something from what Sanjeev was talking about in the earlier conversations that I thought was very interesting. I'm going to pick up a nuance from what he said, which is that the funding winter isn't there across for all startups. It's not like one broad brush, right? So what we are seeing on the ground is that there are certain companies where they're still attracting a lot of attention, and there are others where it is a little bit tougher. And I think the ones where it is tougher is where the last couple of years the focus was simply on, and we were talking about this outside also, simply on, let's say, customers or revenues and sort of burn at all cost. Okay, and whereas others who've started the right way and focused on profitability, focused on unit economics up front, are finding enough and more sort of interest, right? So it's not about a broad brushed funding winter. I think it is pockets where you are seeing correction. And I think what is very heartening as a Series B investor, slightly later stage investor than a lot of the ventures investors around, is that we are finally seeing the entire ecosystem from startups to early stage investors, to venture capital investors, to Series B investors like myself, all speaking the same language. And this was not happening in the last 24 months. The last 24 months, it was almost like you had people who were, imagine 4 people trying to have a meaningful conversation, one in Greek, one in Latin, one in French, one in English, one in Hindi. You can just imagine how that conversation would go, right? Now we are all speaking the same language. So I think that is a very big step forward. And I think personally I'm very excited because I feel that when that happens, there is a correction across the ecosystem and there is sort of a deeper level of understanding across the ecosystem. So, I'm very excited about where we are today.
That's a very interesting point when you said there is a synchronization of thought process across the people, whether it's investor community, it's the startup founders and so. LPs, I want to check with you, Nupur, as well. Are they singing the same song or there is a change in the LP attitude as well in terms of funding to startups, VCs and GPs?
Thanks, Salil, and pleasure to be here. I think from the LP perspective, let's just bifurcate it between two, the offshore international global investor and the domestic investor. Like in any macroeconomic financial disruption, what has happened in the US and what is happening with the interest rates has just made it a lot more difficult for international investors to invest outside their home markets. Because on a risk-adjusted dollar currency basis, their opportunity and ability to make strong returns exist within their home markets, right? So when international LPs are thinking of investing outside, the diligence, I believe, has become a lot more nuanced. And I also believe that because of the perceived slowdown post-pandemic, etc., the risk appetite has lowered. So, the willingness to create new relationships is a lot lower than it was, say, pre-pandemic. On the domestic front, I don't think that LPs are really shying away.
Okay.
Because I think on the ground, everybody continues to be optimistic and bullish about the opportunity that exists in India. What I am hoping for is a lot more nuanced and informed decision-making to come through on the domestic LP front. I think with experience and sophistication that comes in, they are going to be a lot more discerning. But we'll see how that plays out. Because right now, there is enough funding opportunity in the market.
Yeah, I'm hearing micro VCs are now also sort of becoming a chapter across the board. Sonali, you being founder, and the kist is the word I'm afraid of, by the way. But for you, looking at the winter from a founder's perspective, right? It's a very different aspect. You're going to raise the capital. First question, is there a difficulty to raise capital? If yes, what are those challenges you're facing?
Thanks, Salil, and great being here. So when I used to talk to my father, say 2 years back, he happens to be a hardware store dealer, which is like a small 200 square feet shop. And every time that we discussed business, he used to ask me that, do you look at customers acquired or do you look at the profitability? And the argument that he was giving was to say that I would never sell a 100 rupee product for 95 rupees in the lieu of believing that I will get more customers in the future, right? So when we were doing discussions, say 12, 18 months back, everybody, at least on the investor side, were looking at how many customers you've acquired. People were looking at what is the concept, whether you are able to prove that concept or not. But there were no conversations largely on the P&L. So P&L was more a byproduct after the investment decision had been taken, not being the true driver of the investment decision. So now when we do discussions, I think that is the big fundamental change, where people are not just looking at the customers or people are not just looking at the revenue. People are considered, or it is an important part of the investment decision on what is the true unit economics. Whether if I'm able, or if I'm selling things at 95 rupees today, whether it has a true potential of getting to the true customer lifetime value or not. So those are the questions which are becoming far more fundamental and are occupying discussions rather than just questions around customers, questions around growth, so on and so forth. So that's where we see a big difference. And I think it is exciting times ahead, because as a founder, one wants to start believing that this is the franchise that I'm creating and this is the true potential of the franchise, rather than just believing that, oh, I will acquire customers and later on worry on what will the true business model will be. So that's the big difference that we see now.
Okay, no, very nice. I'm coming to Bhavna as well. Bhavna, HP has been working globally with the startups, I'm sure. Now this winter word, I mean, I don't know why we have created a winter as a word. I'm sure India never has a lot of winter at any point of time. But do you find a challenge with customers, especially with startups, when their spending in technology is going down, or they're very conscious about it? They want to rethink about where they are, because 99% are technology oriented. I mean, fintech, edtech, health tech. What's your views on that?
Excellent question. The way we are looking at it is clearly not a winter term. Right?
Okay.
For us, it's more about a reset term, right? And that's something that's any day welcome. And why I'm saying this, because I think, you know, as some of the panelists also talked about, it's a really good thing to bring focus to the right business metrics, right? For example, technology is an enabler, right? For any business, the way finance is an enabler, right? So it's also important to see that what are you prioritizing? So at any given point of time, right, some of these technology startups, and not just in India and globally also, and we work very closely with them, we're very clear that, you know, if you really want to drive a long-term sustainable business, it's very important to rebalance what you have, right? And that's why we call it a resetting movement. So downturns and upturns will continue to happen, right? And I think the fact that there are so many founders sitting here and the whole industry, I think it's always welcome. It's nothing new. I think it just makes the whole business, the industry more resilient. But technology being a stronger part, it's important, you know, to look at it that who are going to be your technology partners in the long run, who are not only interested in saying that, you know, the billing should continue to go up depending on how the business is going, but how the efficiencies can come in to the picture. And that's something we are seeing amongst a lot of startups, especially the matured startups, that, you know, once you reach an inflection level, how do you reset and rebalance your entire landscape and not really shifting from one place to another completely? Because that also means disrupting what you have.
Yes.
Right? And you don't want to mess with what you have, but doing it in a manner which is more balanced approach of saying that what should stay, let's say, on public cloud, what should stay on-prem, what are the areas which you want to control? For example, data, security, that's something you want under control. So how technology, so as you know, as HP, we are working very closely with them to ensure that they are able to run faster without giving up control.
Got it.
So that's a new theme that we are seeing, and that's something which is totally welcome.
You know, I have been working on a theme, something called Control Alt Delete. Right? I mean, this is a very common terms. What do you control? What do you delete? And what is an alternative you have for anything? So I can agree with you. Shivani, I'm coming to you from a similar perspective. I see founders utterly confused today. Suddenly the world has changed for them, right? I mean, 24 unicorns created last year. We should have been at 125, 130 unicorns. We are at 115 unicorns, which means 15 odd unicorns have gone back to be non-unicorns, right? The valuations have gone down. Now, earlier I picked up capital by scale, by acquisition of customers, cash burn. Today, my metrics have changed. So as a founder, I'm completely sort of, how do I come to Shivani and say, please, I need some money? So what is your outlook from a VC perspective? Has the matrices completely changed? Have they gone to basic units? What's the scenario today?
I'll answer that by saying that, during this whole euphoria, the one thing we always said is, we don't want to back unicorns. We want to back stallions, right? A unicorn is a mythical creature ascribed a certain valuation by another mythical, character, whereas a stallion is resilient and consistent. And again, I'm echoing what Sanjeev said earlier. What my advice to founders would be, don't be confused, don't be stressed right now, because it doesn't matter what someone else is ascribing to you, right? A lot of these valuation parameters were anyway notional. It wasn't like a lot of the founders were getting cash off the table at those astronomical valuations. What was really happening was VC funds were putting those astronomical valuations. Then another VC fund was coming in and saying, hey, you've put an astronomical valuation, guess what, I can put an even bigger one. In all of this, how was the founder benefiting besides his or her ego feeling really great? In most cases, the founders were not getting exits out, right? So I think that it's not a time to be confused and stressed. In fact, if you look historically at the world, right? And of course, we've seen similar situations before, and I think the most recent situation that we've seen is in 2008. And if you look at some of the most brilliant companies today, right? And of course, they've gone through ups and downs, but let's just take a few. So technologies, things that we're all used to, Airbnb, Instagram, Uber, all of these companies were born post the crisis of 2008. So I actually think it's a brilliant time to be an entrepreneur. It's a brilliant time because everyone's asking the tough questions. Your peers are not getting funded randomly by some VC who like them better than you. It's a great time to be grounded, to be focused on core business. Across the panel, we are talking about not just customer acquisition, revenues, cash flow, whatever it is, right? Resilience. But the best businesses are born out of crisis. And I think that the number one thing coming out of this, if I was an entrepreneur, the number one thing that I would come away with is, how can I get more from less? And how to get more from less, that aspect of being frugal will really, really hold companies in great stead. And I think we are going to give birth to lots of stallions.
So what you're saying is quality is now mattering a lot than actually a quantity. I think quantity was largely playing a big role in 2020, 2021, but now 2022 and forward, people are saying quality makes a big difference. So I will be very conscious, going very detailed, etc. But then, I'm coming to you, Sonali, as a founder. Would you wait and watch for the valuations to go up, then raise capital? Or what's the plan?
So I think about it differently, right? The way I think about it is that capital raise should be an outcome of what is the requirement of the business. It should not be an outcome of what is the valuation that one is going after. So all these metrics, which is to look at profitability, to look at unit economics, to build resilient businesses, are pointing towards the fact that let the capital raise be an outcome of what is the business need rather than valuation be an outcome of a raise. And that holds true for even an IPO. So that is the way I think about it, that build great businesses, use this phase as a phase to double down on what are your cost drivers, what is the lifetime value that you will realize from the customer. Think of it as making sure that your business model is strong enough to survive both the peaks and the troughs. So that is how I would think about, say, the next 12 to 18 months.
Sure.
The other thing I would want to say is there is a very popular saying which says, I don't think, stallion thinks for me, right? I would say as a startup founder, one was thinking in that direction, say 2 years back. I would say it's the right time to gear up, buck up, and become a stallion yourself. So that is my view.
I'm sure, planning to become a unicorn, I'm pretty sure. Nupur, important question is, we have been betting ourselves on founders and the business model of the founders. Largely, this was the play on a B2C side. Now, we are seeing funding more happening on a B2B side. where founders are largely engineers. I mean, they're creating a SaaS-based platforms and so. Is this still a criteria, big criteria for investments driven? Or still, now we're shifting our gears and saying founders plus the business models makes more sense?
I'm hoping it's the latter. See, you have to have conviction in the people you're backing. Without the right people in place, you could have a great business model, but still not be able to execute on it. If you have a very strong team and a business model which is maybe not superlative, you can still find ways of pivoting, strengthening the business model, finding adjacencies, etc., that really allows you to build a superlative business. I think the challenge that we've all seen is a lot of the investing euphoria has definitely, of course, focused on founders, but also on what the general market sentiment has been. I think there has been relatively less focus on figuring out the business model. And, let's be honest, at a very early stage, the business model isn't even really fleshed out. So, at some level, you are limited in how much of an evaluation or how much of a bet you can take on a business model, right? So you really need to have a strong weightage on the people and a deep conviction in their passion, in their dream. I think what I'm hoping to see change is in how these business models get translated into business. How do you build the team? How do you build the fundamentals? What are you emphasizing on? So, earlier we were chatting and you sort of mentioned that we are moving from revenue to EBITDA. And we also need to then move forward to cash flow. Because that is when we start to think about creating a great, robust business. And I do think that investors have a very important role to play in this. If you're constantly after your founder saying, give me only the revenue metrics, you're not really helping that founder in build that discipline and that focus on other aspects of the business, which are equally important for longevity.
Sure. Shivani, your viewpoints here? Any?
Absolutely. As I said, I think this is the best time to be an entrepreneur.
Okay.
If you look at the overall ecosystem, see, we are talking about funding, winter, and all of that, right? But just to give you a historical sense. So if you look at the deal volumes in India from an investor standpoint, okay? So if you look at, let's say, 10 years prior to COVID, average investments were about $8.5 billion a year. Then that peaked. I mean, you have the numbers, Salil, but that peaked, right, in 21 to some 60 billion or something.
Yeah.
And then it's come down a lot. So we are comparing it to the peak. But if we look at it from a historical standpoint, of 8.5 billion every year, pretty consistently, we've sort of come a long way. And I think the other thing which has happened is that while I know Sanjeev talked earlier about the fact that all of us in India, we love profit-making companies as an ecosystem, right? One of the big breakthroughs was the fact that our Securities Exchange Board has allowed companies that are not profitable to list. So that is a big sort of mindset shift, right? So now, if we are all speaking the same language of unit economics, we are all speaking the same language, we need to build resilient business models, we are operating in an ecosystem which is much more mature than it was before. We are operating in an ecosystem where entrepreneurs have options to get exits, entrepreneurs have options to get liquidity. So overall, I think it is very positive.
Sure. Now, I'm taking the discussion further and double-clicking. When we are looking at unit economics, when we are looking more deeper with involved with the founders and co-founders in the business side, are we saying that as investors, we will be more operationally involved with the business? Or we still want to keep it an investor outlook? Or we should bring an ecosystem play together? I mean, for example, HPE is an ecosystem player, right? So I want to check, is it a double click? It could be, also founders feeling that, I have to now get into an operational discussion with the investor, whereas investor was at least 12 feet away or 15 feet away from the business real sense. Is it really deep diving now?
I think that's an excellent question, right? And I think that really depends on the kind of investor. So some of the investors are very, very operationally involved, and also depends on the kind of company. So let's say you are the kind of company that can demonstrate to an investor that you are doing these 10 things on the operational front and are building a resilient model which is profitable, where there is a very good product market fit, where there is a real value proposition. Finally, for the investor, the proof is in the pudding, right? So if you can demonstrate all of these things, not all investors would want to get thoroughly operationally involved, frankly speaking. So some subset might.
You want investors?
No, I would say that if the investors come with the right capability, right, of being involved, they should be involved in the at the operating level. If the investor is not the one that comes with the operating capabilities, then they should do the right amount of due diligence to say that whether they believe in the idea or not and whether they are ready to invest or not. So it is about whether it is a strategic investor or otherwise, which will become fundamental to say that whether the investor should be involved or not.
I'm yet to find a non-strategic investor anywhere.
Investors continue to be non-strategic. And I think it is.
Yes, please go ahead. I know it's a very interesting question, by the way.
No, I was just thinking that from, if you look at venture funding, this is probably the one advantage that we see coming out in favor of founders, because money is not flowing down in a river anymore. And it actually gives founders the opportunity to have exactly this kind of a thinking internally. What is it that I need to make my business successful? And therefore, which is the kind of investor I need on my cap table? Right? Because you suddenly don't feel the FOMO, you don't sort of say, oh my God, all of my peers are getting funded at these valuations, I need to do the same thing. Right? So there is a slight slowdown in the, in the mating game. People are giving more time to that relationship. And I think that's the advantage for founders. You can just say I need help in this field, this investor is great in this field, I enjoy the conversation, they will give me value, let's go with them.
Got it. So I think it's more closer the relationship which is getting there. Please.
Yeah, I want to make my point. I think that's a really good point that you made out there, because, as part of one of the initiatives, we also enable GTM, right, as part of a startup program that we have under HPE. For a lot of startups, right? And that's a change that we are seeing, that some really good entrepreneurs out there, they value this GTM enablement or acceleration and the mentorship that you really want to bring on the table more than the capital. Because they feel that in the long run, that's going to really help them secure a much better value, right? Not necessarily the valuation, but the value, right? And they value this a lot more than just saying that, because we also invest, right? And for that matter, there's no winter, there's summer, right? I mean, we have made almost 4 or 5 acquisitions recently, and some really fabulous ones recently only. On top of that, a lot of these startup, entrepreneurs, they're fabulous in terms of the energy. We are not seeing that kind of a slowdown in their approach, and especially the right ones, right? They clearly focused that, this is the best time. There is a right sizing of the valuation, as you talked about. That's a great time to be an entrepreneur. They're really valuing that how you're adding value. And not really necessarily, extending and saying that we want to interfere in the business. So they're not looking at it from that perspective. They clearly see the value, right, of the ecosystem, right, and how to leverage it. So I think it's also
I'll add to that. I think that's a good point. I'll just add to that. Is that, and this was a discussion we were having in what we call the pre-panel offline at lunch. So I'll bring up one of the nuances there. The one thing that I am seeing on the ground, which is very heartening, is that there is a change in mindset from, oh God, how much diligence are these guys doing, to, wow, I love the level of conviction which comes out of all the diligence that they've done. Because conviction does not get built without the hard work of actually having gone through the nuts and bolts of understanding a business thoroughly, right? So I think there is a lot of appreciation from the founders about the conviction that is coming in along with the money, right? So there's a complete change in mindset.
That's a very good point. In fact, there are a couple of minutes left. Guys, if you have any question, please raise your hand. We'll have our colleague give you the mic there. By the way, they're thinking about the question to us. Just last, very brief question. As investors, Nupur yourself and Shivani yourself, what are the two things you're looking forward for in a business with the founder? And as a founder, what are the two, three things you're looking in the investors? Very briefly, I mean, straight.
Yeah, I think if I were to go first,
Please.
there are two things that at least we are looking at when we're thinking from investment standpoint. One, as much as one is saying that the diligences have become longer, right?
Yeah.
As a founder, if there is a conviction in an idea, and say after 1 or 2 or 3 rounds of diligence, one starts believing that there is conviction, I would say, given the lesser number of options that we currently have, the commitments have to come in faster rather than the commitments also being prolonged. So that is one ask, because the diligences can go on for 6 months.
Pain is
it can
coming
go
from
on
the
for
heart, I
12
could
months,
see that.
24 months. But I would say, if there is a starting point belief in the business, the commitments have to come in faster. That's the first point. And the second point is that as you think about, say, the next wave of growth, right? As a founder, one is also trying to build new business models, which are where part resilience is proven, part it is unproven. So the appreciation on new business models have to be also something that the investors would have to bake in, because the unit economics, the revenue potential of that idea has still not been proven.
Sure.
So to that extent, there is a part of the business model which is proven, which should go into valuations, but there is a part of the business model which is slightly newer, which is also supposed to be baked in into the valuations, but with the right amount of discount.
Excellent.
Those are the two asks that I would have.
I can hear the pain from the heart actually coming in.
Part pain, I would say part reality.
So I'll add, because I'll add the investor's point, is that the couple of things we look for is there real value proposition, or is this a hype? Okay. Is this company really solving a problem? Or is it sort of just a nice to have, where there's a lot of great buzzwords and, people excited about it. And the second point is the alignment of the promoter with us. So I think that cuts out the frothy, interim valuations. Is this a company that wants to grow sustainably? Do they want a solid partner by their side while they do that? Are we talking the same language?
Got it.
So I'll take a step back from this and I'll say, let's assume this is all covered in my diligence. What's the quality of the business? What's the quality of the idea? What's the quality of the team? I think for me, the most important things are what is the chemistry? This is a long-term relationship. Is this a conversation that you can have on a regular basis? And is this founder open to ideas, open to change? Because, everything else you can cover through your diligence, everything else you can cover through your documents. But I think these two things are fundamental to investors and founders being able to work together. Do you respect each other? Can you have a frank conversation in saying, I don't think this is going anywhere? Can you take the hard calls together? And if that relationship works out, you can actually go through the whole winter. The whole funding winter, you can write it out if you have a strong relationship with your investors. So for me, that, take a step back, and those big picture things about can we work together become very important.
That's a very big sort of an issue as well as advantage point for any startup if that chemistry works out, right? I was always weak in chemistry as a subject, by the way. But buzzer is up for us, time is up. But, I must say this is the first panel I found where, indirectly, directly, we have said that it's not a winter. Don't think that it's a winter, guys. It's sort of a small correction in the market, valuation.
We are in March.
We are in March. We are part of the summers now. We have crossed that. But with this, if the decision is that it's not a winter, then it's a brighter side of the story. Many people would create more unicorns in the country. And I see the woman power on the stage today. Thank you very much for sharing the stage with us. Thank you very much. Please give them a big hand, guys.
Thank you so much. That was a really enlightening session, and we have a couple of questions from the audience, so we are just passing around the mic.
Thanks. I'm Animesh, co-founder at E42. We are a no-code AI platform on which you build AI workers. So my question to the investors on the panel, especially Shivani, is that, given all the parameters are same, as in, the value proposition, the team, the LTV, and the numbers, and the, given all of that, frankly, what do you think? Would that same company have a different valuation last year? or next year vis-a-vis as on date today?
So he's basically saying that, am I valued same or valued differently?
The honest answer is yes, absolutely. It will have a different valuation because valuation is like beauty, right? It lies in the eyes of the beholder. And you have, 21 was a different year. Everything was very beautiful, right? And this year we are looking at things with sort of without the rose-colored glasses. So the honest answer is absolutely yes. But it doesn't matter. It doesn't matter because this is just one milestone, right? This is not the end game. You are building a business today, you have a valuation. Like I said earlier, it is an ego massage. You're not exiting at this valuation, otherwise most of the investors will anyway not invest in you, right? So that's a moot point. So yes, you may feel slightly more humble this year than you would have in 21, but that is okay because you're in it for the long run.
Yeah, having something is better.
It's also about, you want to be an overnight success or you want to be evergreen, right, in terms of the business model. So it's also that.
Yeah, sorry, Sanjeev here. I have a comment on the diligence observation you made. If you have 3 or 4 situations of corporate governance lapses coming out, where expenses are being padded or revenues are being padded, expenses are being padded, money is being taken out of the company, the diligences will get more thorough and they will take more time. It's natural because investors will be more apprehensive. And the diligences I see happening now are slightly more thorough than they were maybe 6 months ago, 1 year ago. They're quasi-forensic. And this is the nature of the beast. If there are corporate governance lapses coming out, diligences will get more thorough and they will take more time, unfortunately.
No. So I was not against the diligence point. I was saying the investors have all the moral and logical right to do the diligence for say 12, 24, 48 months, and it can be an ongoing diligence, right? It can also be appointing CFO and saying that the CFO reports to the board. So it can go to that level. My larger point was that given there is a team, right, which is a small team that is trying to also build the business and cater to the investors on the diligence side, after X number of months of diligence, show a firmness on the answer because that also helps the company plan. So that's my larger point. I am not anti-diligence. As much as I made that point, I am a supporter of diligence because like Shivani mentioned, it also gives a lot of insights to the founders because they know these are the drivers or the metrics that I need to work towards.
And it is true what Sanjeev has said, that the governance has taken a sort of a bigger role within the investment community as well. They are going much deeper, taking their own time, because they feel that there have been cases and instances where the padding of the revenue, other things have happened. So it's going to take time. Okay. I mean, as much as I'd like to continue, this is just warmed up right now, but the time is up, guys. Please give a big hand to these people here. Thank you very much for your time today.
Thank you so
Thank
much.
you.
That was a really amazing session. Can we all come together for a group photo op? Thank you so much, ladies, for sharing your diverse set of perspectives from how to have more from less to maintaining the right relationship with your investors. And we also have a small token of gratitude and appreciation from the side of Mint. I would humbly request Shalil to kindly present the same to our panelists. Bhavna, Shivani, Nupur, and Sonali, thank you so much once again for taking time out and joining us here today. Can we please put our hands together for all the panelists for such an informative and knowledge-enriched session. Wow, thank you so much once again. I think we should have a picture that way as well. Yeah, holding our mementos. Yes, fabulous. And thank you so much, Shalil, for a wonderful moderation. Thank you. With that, ladies and gentlemen, we are proceeding towards our next session, which is going to be, again, a fireside chat. I would humbly request my team to kindly set the stage for that. But before we proceed towards this session, please tell me honestly, are you all having a good and an insightful day today? Yes? Can I see a raise of hands, please? If you all are having a good time, if you all are gathering some really valuable insights, please give me a raise of hands. Fabulous. So why don't we let the world know about it? So please make sure to tweet, please make sure to use the hashtag #MintStartupIcon2023 and do tag us at LiveMint. So with that, ladies and gentlemen, our next session is going to be on transformative technologies for startups in India. Again, one of the much awaited fireside chat we are about to have today. So I think we are almost done setting the stage for this, so we can, without any further ado, keeping the paucity of time, we can proceed towards this session. So before we proceed towards it, I hope that you all remember that before the previous panel discussion, I told you one ratio. I hope you all remember it. Yes? Do we all remember that ratio? Can I just see a raise of hands, please? Fabulous. Gentlemen at the back in black. So what was the ratio? Could you please tell me again? The ratio. Yes? Sir? Yes, please. 242. Fabulous. Fabulous. See? We all are quick learners. We always retain such information. I'm so proud of you right now. So right now, we are going to again create that ratio, but not with our claps. We are going to do it with our taps. How exactly? Can you show me both your hands up in the air? Both your hands like this. Fabulous. Wave at me. Amazing. Now, right now, we're going to create that ratio on our table. The ratio was 242. We already remember it. We already know how to make it. It's going to be like this. Everybody, please pay a little attention. On the count of 3, 2, 1, go. 1, 2, 1, 2, 3, 4, 1, 2. Can we do that on our tables now? All right, on the count of 3, 2, 1, go. 1, 2, 1, 2, 3, 4, 1, 2. One more time. 1, 2, 1, 2, 3, 4, 1, 2. One more time. 1, 2, 1, 2, 3, 4, 1, 2. Fabulous, fabulous. Now that we have your attention, without any further ado, we are proceeding towards this really interesting fireside chat. And now, I would like to invite our expert speaker on the stage. Please join me in welcoming Akash Saxena, VP Samsung India Electronics. And to spearhead this conversation, I would request Ashwin Moduga, Head Research, Mosaic Digital, to kindly join us up on the stage. Handing the proceedings to Ashwin now. Over to you, Ashwin.
Please take a seat. I have with me Mr. Akash Saxena, Vice President at Samsung and sort of heading the enterprise business for Samsung, but we'll get to that in a minute. We have close to, I think, 100 people inside and, just outside the room. Close to 70% of them are founders, co-founders is what I hear. My tryst with startups has been ongoing for close to 3 to 4 years now. I know a particular founder who's at $2 million per year in terms of revenue. So he has a 4 o'clock everyday stand-up meeting with AWS and some of the other cloud service providers on cloudifying his product. Right at 5 o'clock, for half an hour, he actually sits with the office in charge guy in the plug and play that he works. And he needs to do that because otherwise, if he doesn't have a good relationship with that guy, he doesn't open the lock and key on a Saturday or a Sunday for them to work. And the reason I'm quoting this example is one of the biggest things that we've realized in the last couple of years is the amount of varied tasks that founders and co-founders need to do in a single day. It is probably unimaginable because they are the ones who are building that particular company. I think just for that fact, for everybody who's here, please a big round of applause to each of yourself, Please, a very big round of applause for all of them. I think just the amount of work that you guys do on a daily basis in itself is congratulatory. Thank you so much. Introducing my guest and panelist, Akash Saxena is VP at Samsung Enterprise Business. More than VP, I think he's part of the founding member or founding team of Samsung Enterprises, foray into the world of enabling solutions in the enterprise technology business. One thing that I wanted to check with you, Akash, as an opening, is I recently met a startup founder, one of the bigger mobile-based startup companies, and I asked him what he would, like to redo. His startup was founded 10 or 12 years ago, and the only thing he told me was that he would have liked or loved to start a startup now rather than 10 years ago. And the reason was that the kind of technologies that are now available for a startup is basically, he felt that that would allow him to catapult, 10 years ahead rather than what he's been using for the last 10 years. And legacy issues will continue to, slow down their approach towards the market, right? I wanted to start and begin on that particular statement, right? In terms of technology, and you coming from, the devices side of things, wanted to get your view on what is it that is new now in terms of innovation and enterprise technology. What is that role that Samsung is playing or going to be playing for the next 5 years in this particular aspect? Where do you see technology helping some of these startup ecosystems grow in the next 5 years?
First of all, thank you for having me here. It's very exciting to work with startups, and I was reading an article recently about hybrid startups, and I was wondering as to what is hybrid startups, and that article caught my attention. And when I read it, I actually figured out and I realized that it is about large multinational companies which want to go after a particular area which is not their core, and they put all their investments. So if you look at, and we had a very good discussion around investments and how it is easy and difficult, but it's a business user case and the problems that you're solving. So at Samsung, as you know, we are a consumer company. But 10 years ago, we kind of started the startup focused on enterprise, because we believe that there's a lot of value that we can add to the corporates and to the startups as well. Now coming to the technology, and I completely agree with what you said, the technologies which are available today, now I still remember, and having been in the industry for so long, what we have seen is way back in 2000, we had this e-business thing that came up, and we used to talk about what is e-business. Then we moved on and we moved over to cloud. Now if you look at today, almost 5 to 6 years ago, we used to talk about how technologies like AI, IoT, 5G. We have been hearing these terminologies for quite some time. But if you look at today, today is a time when all these technologies are actually effective, available to the consumers, available to the enterprises for their use. And that's the value that Samsung brings to the table. We invest billions of dollars every year in R&D. We are one of the largest spender in terms of dollars on technology, the #1 patent company. And as a result of it, whether it is 5G, whether it is AI, IoT, blockchain, we have been working on all these technologies to make sure that we come up with all these products and solutions and then work with the startups. So we have a startup program as well in India that we run, which is being run by our R&D teams. So we have 2 R&D centers, one in Bangalore, one in Noida, and both of these R&D setups actually work with the startups. We invest into startups, as well as this current program that we are running is valid till March end, and we are looking at applications from startups to apply, where Samsung will not only give a fund to the startup, but as well make sure that we mentor the startup on all these cutting edge technologies that I spoke about.
Understood. I mean, so when you speak R&D nowadays, just out of curiosity, that dollars that you or any other company spends into R&D, are you now also right from development looking towards specifically targeting startups as an ecosystem? Because previously, from what I know, most R&D efforts used to be focused on the large enterprise business, the large company business, etc. Are you seeing a change in terms of right from the development process itself?
Absolutely. So if you look at what we all have seen there are startups which have completely changed the game. And there are a whole lot of new stuff that we have seen, things which are out of the box completely. We have at Samsung, although we are investing so many billions of dollars, but you know that there might be a startup somewhere which can actually change the complete game. So that's why Samsung has been investing a lot into startups for the last several years. And we are making sure that one is the investment part that we are doing, so that we make sure that we are looking at technology and the business transformation that is happening, as well as making sure that all these technologies that we are bringing in, the bigger, larger world and the ecosystem should be able to reap the benefits of that. Most important thing is the benefit that you bring to the business and to the customer. So Samsung is making sure that we are working with the startups and the entire ecosystem to build that ecosystem where we are continuously investing to bring in cutting-edge technologies to our customers, the end customer which is getting impacted. So make sure that we bring in that stuff to make sure we improve the lives.
I think this collaboration between traditional technology builders and some of the new age startups, I think, is one thing that has led to the very fast growth of the number of startups that we see every day. I think Bhavna also was talking in the previous panel about how they also build a program for startups and how they move it forward in trying to enable them with their GTM strategies, etc. I think each individual company, let's take Samsung for example, has its own culture. And that culture and the way you do business is sort of embedded into some of these incubator programs as well. And that basically carries out some of the DNA from some of the larger enterprises into some of these startups. I think that's a very good sight to see. The other thing, Akash, that we've been noticing when we do research from an organization standpoint is that the culture of startups, the talent, the people, and the process, I think these are some of those key things that are extremely important for the success of a startup. And what we've seen, especially in the so-called digital native brands, is that this cultural demand for quality in the process, the way the talent functions, the way the culture in the organization functions has become extremely important for success. And one of the biggest trends that all of us has noticed is hybrid workforces that you were also speaking about, sometime before. And more than hybrid, it is now fluidic, right? It's not just a home versus an office setup. It is a home, a coffee shop, on the move. Someone's suddenly working out of Manali, on a Friday or a Thursday. It's absolutely everywhere, right? And one of the biggest intolerance areas for millennials or the new employee force that is coming into these workforces is that they do not have patience for non-standard user experiences or user interfaces, right? So seamlessness has become important, especially because that workforce is hybrid, fluidic, on the move, shifting from different devices. Your view and opinion, I think I sort of caught some takeaways on seamlessness back there. If you can provide the view of what the next 5 to 10 years are going to look like for, from a technology standpoint, in terms of standardized user experiences, seamlessness, integration, to enable such hybrid and fluidic workforces.
Well, you rightly said, and in fact, it has changed a lot in the last, pandemic has actually changed it completely. And we have been working on this for the past several years to make sure that we are able to give a customer experience. It's all about the overall device experience. And that's why we call ourselves, our organization is called Device Experience, DX. And as you rightly said, today when I am moving, and let's say I'm in a car, I've got something and some ideas or a document that I have to edit. I'm editing it on my foldable device. Now, if you look at a foldable device that we have, and we have some products at the back that you can have a look at. I can have a complete Office 365 and I can edit a Word or a PPT document. I'm on my way to the office. I reach office, I open up my laptop, and the same document is seamlessly available to me out there. Now the beauty out here is whether it is a mobile, whether it is a tablet, whether it is a laptop, that document is available seamlessly all across. To the extent that I have some images which are there on my mobile because I took those pictures while on the move. And I have to include those pictures in my document. I can seamlessly copy and paste from my mobile. So I say Control C on my mobile, I do a Control V on my laptop. It is as simple as that in terms of the multi-device experience that Samsung is bringing to the table. So similarly, if you look at today, in large enterprises, there are people who are going to the office or in a shared space also. In the startups, there are multiple people who work from home. But at some point of time, for some important meeting, they will come to the office. Now in the office, you can have a shared space. What is a shared space? A shared space is, I put these 5 seats here where my people are going to come. I have got only a monitor and a keyboard and a mouse. And I actually don't even need a mouse. I've got my mobile phone, and using the mobile phone, today's mobile phones are as powerful as a laptop. I can turn on what we call as DeX, which is a desktop experience. And with that desktop experience, on the monitor, I would actually get a complete Windows kind of a desktop. And in that desktop, I can run all my Office 365 applications. So I don't need a laptop even when I'm coming to the office. So my laptop is continuously connected back home because there's something going on that. But I have to come to office for this meeting, and I have got some important documents which are there on the mobile, and I just connect it, and it is seamless and secure. Because as soon as I get out of the DeX mode, the monitor becomes blank, it is standalone, and all my data is on the mobile. So there is a whole lot of multi-device experience that we are bringing in, and we do that in a complete secured environment because security is of paramount importance in this whole thing. And data privacy issues are becoming more and more important out here. So we make sure that everything that we provide is completely secured on the mobile device as well as across all the devices that Samsung has.
Got it. I mean, you ended on a very pertinent note, which basically, whenever I speak to a CTO or a CIO, one of the biggest concerns, the sleepless nights that they have is related to security. I mean, hand on heart, that seems to be the biggest problem, specifically over the last 1.5 years, where the number of endpoints, the number of devices, the number of new places that data is being accessed in an organization is just exaggerated and blown out of proportion. With standardized user experience, interfaces, etc., also comes that problem of security. I know you gave a couple of examples of how you try and solve that. You move the phone away and it screen blackens, etc. What is the innovation roadmap in terms of security for you? I mean, maybe if you could give us a few examples, if not examples, if you cannot share some of the examples, maybe the general thinking process of how this is going to evolve, because I know for a fact that Samsung is very good at making these 100-year, 50-year evolutionary paths for technology growth, etc.
See, when we started with the mobile devices and into the enterprise space, we realized that security is going to play a vital role for the consumers as well as enterprise. And that's why we built up what we call as NOx, which is a defense-grade security. It's a only unique solution, which is a hardware cum software solution. It's not just a software solution, it starts from the chip, which means that when the device is switched on, it actually checks whether the image which is loaded, the Android image which is loaded, is the right image or not, or has it been tampered with. So that's the level of security that it begins with. And then there is a software layer over it. Now, there are multiple of these startups here which probably are looking at spreading across the country. And you need devices across the country. You can say, I need 2,500 devices. These have to be deployed, 500 in Delhi, 500 in Mumbai, and so on, across 5 metros, 500 devices each. And you want a separate application to be loaded in Mumbai, a separate application in Calcutta, separate in Delhi, and so on. Now what do? In the earlier days, you would have to get a partner who would get all these devices at one place, open up all the devices, connect to a laptop, load all the stuff that you want, and then repack it and ship it, and then the user will get it. We have changed that completely. You just tell us 2,500 devices to be shipped. You ship those devices to those locations. If I am the end customer working for one of these startups here, I would just open the device, sealed device from Samsung comes to me. I open it up, it connects to I put in a 4G or a 5G SIM or connect to Wi-Fi. As soon as I do that, what happens is it goes and pings the Samsung server first. When it pings, the Knox server at the back end knows that this device is activated. And we have shipped a particular IMEI to Delhi. And we know this IMEI has to be loaded with a Delhi-related wallpaper, application, security policies. As soon as it pings, all those policies, the wallpaper is all set. Device is completely configured for the end user to use. There's nothing that the end user needs to do, to the extent that I can configure username, password remotely. So that's the level of multi-device, the MDM capability that we have built in. As well as, just to add, there are a lot of companies which are looking at a specific app that they want the device to boot in. They don't want to use it as a mobile device. They just want to make sure that the device is booting in their specific app. So Knox allows you to customize the device. You can say Wi-Fi completely disabled. So you can choose and pick what things you want to completely disable, what is available, and that complete customization is available.
Got it. So seamlessness in the implementation process as well. Got that. I think we are almost at the top of the hour. We have a minute or so left. So what does the next 5 years look like for you? You will be, sort of managing the enterprise business in India. As more than Samsung as a company, as someone who's been in this industry for such a long time, what does the next 5 to 10 years look for you and your team in terms of the startup growth support that you want to provide?
So if you ask me, startups play a vital role. And I've worked very closely with some of these startups. Just to give you an example, we worked with Byju's as an example in the early stages. And every day there are multiple startups that we work with. And important thing for the startups is, and I heard the panelists talking about the business use case and the kind of, you will always profitable startups is what looking at. Important thing is to be able to be aware of the technologies that are available, number one, because a lot of time people are not available or aware of the technologies that are available, and to be able to tap into them. So as a technology leader, it's our role to make sure that we are communicating that to the startups, engaging with them, and providing the mentoring programs to make sure that all these devices, and today what is happening is with internet and 5G coming into play, all the devices, so earlier our TVs, refrigerator, washing machines were not internet enabled. Today all these devices are internet enabled, and this entire ecosystem that we provide, we are able to provide a seamless security across all these. So key is to make sure that please log on to the developer.samsung.com. There are excellent tools that are available, which allows all the apps that you are creating to be able to run on the latest cutting edge devices that Samsung brings to the table every month. So please make sure that you're tapping into that, whether it is blockchain, whether it is AI, whether it is the sensor, the health parameters that you can pull out of the watch. There is a whole lot of stuff that you can do. I would only say sky's the limit in terms of the technology transformation. So please do tap into all the investments that we are doing so that you can bring in a transformation eventually in the life of the consumers.
Yeah, hopefully we'll see much more than that, because I think right time to be a startup. Very interesting times. I mean, funding winters aside, some of the technological advances that I have been personally studying in the last 6 months have been just amazing. So hopefully in the next 5 to 10 years, we'll see a lot more. And thank you so much for deep diving into some of those aspects. Akash is going to be here around, so anybody wants to chat up with Akash, please do feel free to do that. Thank you so much, Akash, for your time.
Sure. Thank you, Ashwin.
Thank you. Thank you so much, gentlemen, for such a wonderful session. And Akash, we have a small token of gratitude and appreciation for you. Ashwin, I would request you to kindly present the same to Akash. Thank you. Thank you so much once again for this really illuminating session. On that note, ladies and gentlemen, we will take a short break here for the next 10 minutes. We hope to see you back sharp here at 5:10. And meanwhile, please do not forget to keep tweeting live with us using the hashtag #MintStartupIcon2023, and please do tag us at LiveMint. We'll see you sharp at 5:10. Thank you.
From different industries scale faster and further with cloud technology. Declining sales due to lack of customers? Not a problem. Alibaba Cloud is here to help with offline and online integrated retail solutions, creating an omni-channel customer experience. Build your brand and online platform with ease. Customers are no longer restricted by distance. Leveraging high-speed streaming technology, you can interact with your customers anytime. Renowned brand or a small business, you have an access to industry-leading search and recommendation technology. Through the function of text search and image search, it's much easier for customers to quickly find their favorite products. Personalized recommendation will accurately customize your product's display and promotion to your customers based on their preferences. With Cloud ESL solution, whether you have only one store or a few hundred branches, you can manage all online and offline product prices on one single platform. Update prices within seconds. Highly convenient and efficient. No matter how innovative your app is, poor user experience is a major barrier to success in the market. Mobile development platform MPaaS reduces overall app development costs while increasing productivity. Say goodbye to low latency and build an all-in-one super app for your business. ECS Cloud Computing will scale capacity up and down on demand, resilient to traffic spikes. PolarDB is a cloud-native relational database compatible with MySQL, PostgreSQL, and Oracle. Each database supports up to 100 terabytes storage data, scaling, backing up, and restoring within minutes. 99.99% usage, highly flexible and secure. Want to further expand your business internationally? Alibaba Cloud's global network service improves your network speed and allows you to easily tap into the market of mainland China, Asia, and other regions around the world. Alibaba Cloud is committed to helping financial institutions comply with international security standards. We have obtained more than 80 certifications and attestation reports worldwide to fulfill regulations across countries. Through cloud quotation, enterprises can get access to stock market status via instant live trading information feed with a head start in investing. eKYC FinTech Solution, a globally leading patent technology, supports enterprises to quickly verify genuine users and automate the authentication process. Struggle to handle a massive number of messages? AI conversational chatbots allow you to respond to your customers automatically, enhancing your service quality and reduces manpower. With security services like blockchain and information encryption, you can be assured about your own and your customers' information security. We are dedicated to creating and offering the greatest value to our customers by collaborating with our ecosystem partners. Accelerate digitalization with Alibaba Cloud.
What comes to your mind when you hear the words corporate employee? But there's one thing that will add convenience to your working life, the Samsung Employee Purchase Program. With this program, you can unlock exclusive deals on the best of the best. I am talking smartphones, tablets, TVs, ACs, refrigerators, washing machines and smartwatches delivered to your doorstep for free.
Yeah, but what's more?
Oh, animated you. Well, you also get offers like no-cost EMI, free insurance plus cashback on Samsung product. All you've got to do is visit samsung.com/in/EPP, enter your work email ID and shop for what you like. That's it. For the first time ever, your work email works for you.
Whoa.
No, not whoa. Employee Purchase Program from Samsung. Start shopping now.
In a rapidly changing market, how do businesses from different industries scale faster and further with cloud technology? Declining sales due to lack of customers? Not a problem. Alibaba Cloud is here to help with offline and online integrated retail solutions, creating an omni-channel customer experience. Build your brand and online platform with ease. Customers are no longer restricted by distance. Leveraging high-speed streaming technology, you can interact with your customers anytime. Renowned brand or a small business, you have an access to industry-leading search and recommendation technology. Through the function of text search and image search, it's much easier for customers to quickly find their favorite products. Personalized recommendation will accurately customize your product's display and promotion to your customers based on their preferences. With Cloud ESL solution, whether you have only one store or a few hundred branches, you can manage all online and offline product prices on one single platform. Update prices within seconds. Highly convenient and efficient. No matter how innovative your app is, poor user experience is a major barrier to success in the market. Mobile development platform MPaaS reduces overall app development costs while increasing productivity. Say goodbye to low latency and build an all-in-one super app for your business. ECS Cloud Computing will scale capacity up and down on demand, resilient to traffic spikes. PolarDB is a cloud-native relational database compatible with MySQL, PostgreSQL, and Oracle. Each database supports up to 100 terabytes storage data, scaling, backing up, and restoring within minutes. 99.99% usage, highly flexible and secure. Want to further expand your business internationally? Alibaba Cloud's global network service improves your network speed and allows you to easily tap into the market of mainland China, Asia, and other regions around the world. Alibaba Cloud is committed to helping financial institutions comply with international security standards. We have obtained more than 80 certifications and attestation reports worldwide to fulfill regulations across countries. Through cloud quotation, enterprises can get access to stock market status via instant live trading information feed with a head start in investing. eKYC FinTech Solution, a globally leading patent technology, supports enterprises to quickly verify genuine users and automate the authentication process. Struggle to handle a massive number of messages? AI conversational chatbots allow you to respond to your customers automatically, enhancing your service quality and reduces manpower. With security services like blockchain and information encryption, you can be assured about your own and your customers' information security. We are dedicated to creating and offering the greatest value to our customers by collaborating with our ecosystem partners. Accelerate digitalization with Alibaba Cloud.
What comes to your mind when you hear the words corporate employee? But there's one thing that will add convenience to your working life, the Samsung Employee Purchase Program. With this program, you can unlock exclusive deals on the best of the best. I am talking smartphones, tablets, TVs, ACs, refrigerators, washing machines, and smartwatches delivered to your doorstep for free.
Yeah, but what's more?
Oh, animated you. Well, you also get offers like no-cost EMI, free insurance plus cashback on Samsung product. All you've got to do is visit samsung.com/in/EPP, enter your work.
Ladies and gentlemen, we are about to resume with our next session lined up. So may I request everyone who has grabbed their cup of tea and coffee, along with some snacks, obviously we need something to rejuvenate ourselves. Please everybody get back at your seats as we're about to resume in next 2 minutes. You all are requested to kindly grab your cup of tea and coffee and you can take it along with you to your seat. Also, there is one important announcement to make, that right there at your tables, there is one feedback form kept. So we would request you, we would urge you to kindly fill that feedback form and share your valuable review with all of us. Ladies and gentlemen, we are about to resume with our next session in another couple of seconds. But before that, I would love to hear your perspectives. I would love to hear your perceptions on the topic that is lined up for our next session, that is retention. I'm sure it's going to be one of the most exciting topics, one of the most exciting sessions for today. So I would request everyone who is standing at the back, hi, if you all can hear me. We are resuming with the session. If you have managed to grab your cup of tea and coffee, you're requested to kindly join us back. Yes, please everybody, you are requested to be kindly back at your seat.
In a rapidly changing market, How do businesses from different industries scale faster and further with cloud
So
technology?
before we move on to the
Declining
session, can we
sales due
please
to
have
lack
some
of
lights
customers?
back on? Yeah,
Not a
thank
problem.
you.
Alibaba Cloud is here to help with offline and online.
How do one retain their customers? I think it's a very interesting topic. So anybody here who would like to share their insights on this, we are all ears. Any top three things we need to do to retain our customers? Anybody from this table? Let's hear it. Hi, the gentleman in blue. What are top 2 or top 3 things, according to you, that one should do in order to retain their clientele?
First of all, it's very important to make any client or customer happy, right? And performing, yeah, by giving them the right outputs and at the same time achieving the targets, yes. And second thing is the competitive marketing, right? What other competitors are not doing and what they're doing differently, right? And retaining them in the market in the last place.
Wow, thank you. Thank you so much. That was really insightful. Number 1, you should focus on making your customers happy. See, that's very important. Customer is the king. And secondly, do what your competitors are not doing in terms of marketing, in terms of promoting your brand, in terms of getting your brand seen by the world. Anybody here? We're taking one more insight from the lady in black. Hi, may I know your name, please?
My name is Samvada. Yeah. I think it's very important to regularly innovate your product or service in order to make your customer happy, because everybody looks for that freshness. So innovation, definitely. Next thing I would say, that regular feedback mechanism. So if I'm not getting the feedback, definitely I'm not improving. So that ease to work with and that ease to feedback is what a customer looks for as well.
What's your name again? Samvida. Thank you so much. That was really insightful what she said. That everybody looks for something unique, something distinctive in the market. So you should keep innovating. You should keep your creative juices flowing into your product. And secondly, she said that it's very important that we should take the reviews, we should take the feedbacks from our customers. Well, we don't have any customers here. We have some of the delegates, we have our guests, so we would love to take your feedback as well. So getting back to that, there is one feedback form kept at your table, so you all are requested to kindly fill it. And also there is one QR code right over here on your table. You are requested to kindly scan it and share your thoughts with us. On that note, ladies and gentlemen, we are proceeding towards our next session. May I request everybody who is standing at the back, hi, if you can hear me, you are requested to kindly get back to your seat. Everybody who is standing to my right, I think I should go there and make everybody settle down, because we have a very interesting session going to be spearheaded by Sumedha, and our moderator along with the speakers are waiting here. So you all are requested, hi everybody, if you have managed to grab your cup of tea and coffee, please get back to your seats very quickly so that we can resume this very unique and very exciting topic that is coming up in the session. Everyone, please be seated. Thank you so much. Fantastic. So as we posed a question at you related to retention, and our next session is going to revolve around that. Well, retention is truly a game changer. The art of retention marketing is no longer a science. It isn't a new strategy, but it is certainly one that deserves a bit more focus and a bit more consideration, as we got to hear from a lot of you as well. And in this session, we will discuss how we can have a retention-first approach from day 0. And for the same, we have a brilliant set of speakers lined up. So let's welcome on stage, by putting our hands together, Harleen Bhatti, Head Retention, the Good Glam Group. Very warm welcome to you, Harleen. Please have a seat at the dais. Along with her, let's welcome on stage Ankur Gatani, VP Growth and Marketing, Web Engage. Welcome to you, Ankur. Please have a seat. And now to spearhead this conversation, may I please request Sumedha Bose, AGM Research and Solutions, Mosaic Digital. Handing it over to you, Sumedha.
Thanks so much. Thanks, audience. I hope you had a good break and everyone has got their refreshments. I'm lucky to come back after the refreshments. I think we will all have the attention of the audience here. Ankur and Harleen, thank you for being with us. This is we're all honored and humble. And we just heard from the audience right now, and I'm so happy that most of the context setting for our panel was already done at the very beginning when Mr. Bikhchandani spoke, right? And I was like, oh wow, he's already set the stage for us, right? For our conversation, right? So yes, retention, right? We always talk of growth, expansion, new markets, new acquisitions, right? For that matter, Harleen, I think there was news today morning itself where Good Glam Group is looking for funding because you're wanting to go overseas, right? But you're not leaving the customers behind that you've already acquired, right? So all the talk that has been happening on retention and this dilemma between what to focus on, new acquisition or retaining, right? Harleen, I'll begin with you. What's your approach and what do you think underlines or underscores the success of a company? And how do you go about your strategy when you have to choose between the two?
Thanks, Medha, for the question. I think, when we talk about retention and acquisition, retention is, very critical, sustainable, to build a sustainable business. I think some of the pointers which have been highlighted by the audience as well. Having said that, won't take away from acquisition. You've highlighted, we are in a growing spree, we are acquiring more companies, we are growing geographies. Acquisition is, the key to growth, to fuel, more customers, bring them into the funnel. But post that, retention, is the key to profitability. So hence, I think both of them go hand in hand.
Absolutely. I think in the previous panels, we already spoke at length on, unit economics and all of that, right? If one is not focusing on retention, I don't think that will be done. Ankur, I come to you at this juncture. In your opinion, when one says retention, okay, what is the first thing that one should look at and how do they go about building on it? Any thoughts on that?
So very fundamentally, retention is not a day 10 problem, it's a day 0 problem. If you're starting a new company and you have a certain set of products, in case of e-commerce, you might have a category you're trying to delve into. From the catalog design to the way you go after your customer acquisition, you have to be mindful that the kind of people I'm bringing in, will they repeat? And at what point of time will they repeat? So from that angle, I think a lot of startups still look at retention as a bit of an afterthought. But that's where we'll all actually be better off learning from the gaming ecosystem or some of the other sharp areas where retention and mobile app ecosystem for that matter, where D7, D30, D15 retention are numbers that founders look at on a pretty much everyday basis. So it's considered fairly critical to the success of a startup, and it's better that you don't treat retention as an afterthought. The how part of things, I think in most cases, most of the marketers and founders here would have been very used to the ROAS metrics, right? You're optimizing for customer acquisition costs. But a majority of your customers who've come in for the first time, about 70 to 75% of them will not come back again, unless you solve for it, very, very early stage of the game. So the how part of it would start pretty much from capturing all of this data appropriately and then appropriately actioning it from the day that you acquire the customer, from the first transaction to the second transaction journey. Zoom into that part properly and it'll solve a lot of problems for you down the road.
Absolutely. Ankur, and I'll just take it a little further. Many founders, and rather for most, they come with a passion, they come with a dream, right? They have conceptualized something and they have that, belief that their product or the service that they have curated is best. And then many take it further and say that, oh, my product is best, my service is good, and loyalty will follow through. It will be a natural outcome, right? Do you think it really happens, or one should really, go that extra mile? Harleen, how has been your experience? Loyalty is a natural outcome, or you really have to work hard towards it?
So Sumedha, I think when we talk about quality of the product or service, that we are involved in, that's the core, right? If that is not there, you cannot think of retention, you cannot think of loyalty, right? So that's like the predecessor, I would say. But the kind of audience. So I come from an e-commerce background, right? When we think about audience, increasingly, the percentage of our customers being Gen Z is huge, right? So when we look at that, I think building trust, building affirmation is very critical, right? That's when there is, let's talk about the BPC industry, the beauty personal care industry. You have good quality products, but how do you reaffirm to the customer, right, about the products being genuine, about them suiting, about it being mapped to what is going on as a trend in the market, what is how does it make them feel in their peer group? That becomes equally important. So with a good product quality and a great amount of marketing on top of it, you I think can maintain very good level of retention.
Absolutely, and I think another thing that you mentioned, the association of yourself with that brand, you'd want to associate yourself, and then that kind of takes the loyalty thing further, right? Ankur, all this loyalty and affirmation, right? A lot of data is doing the rounds, right? Today, everyone is speaking of data and the use of predictive analysis and all. How are you actually helping, your customers achieve this affirmation bit? Affirmation is a behavioral aspect that you are, trying to achieve through maybe tech. I want to understand the journey.
Sure. So, while brand marketers talk in a language which is about the soft side of things, we are slightly more inclined on the data-driven approaches. So, for example, if they have a certain combination and cluster of customers which have been acquired and which tend to repeat better than another cohort of customers, it makes sense for them to address these two audiences differently. So where we feel that we can play a meaningful role is understanding the customer behavior that's coming, and there is a large number of almost, I think, a couple of, 500,000 customers, new ones that come to the platform every month and make their first transaction. So if this is a huge diverse group, you can't address all of them with the same kind of messaging. They will need to be given confidence. There will be some COD customers who need to move to a prepaid kind of model. But in order to do all of this, you can't operate with, a single size segment. You'll have to break this down into like 20 different segments with several variables and then each of these segments differently. And that's where from processing and absorbing all of this data perspective and then making sense of it and letting you action it meaningfully is where we play a role.
Sure. Harleen, at this juncture, you already accorded that, yes, affirmations and on. Any particular use case that you have had in your journey of GoodGram, right, where you saw this translate into ROI, you saw this translate into your P&L. People were talking about the P&L, right? How does that happen? Where's that, manifested?
So, Sumedha, I think I'd like to add one point to what Ankur has mentioned. Retention has to be a company-wide phenomena, right? Right from your NPD team to your supply chain team to your retention marketing, right? All of them need to focus. I think one of the things that we've done, very recently, in the last 6 to 7 months is focus a lot on our NPS data. I think, somebody mentioned customer reviews and I was very happy to hear that, right? What is the voice of customer? What are they saying about your products? What do they like? What do they not like? That's what, you build upon, you grow upon. And, so we've started working a lot on our, product surveys, customer surveys, collecting NPS. And, the one thing that we have seen is a drastic improvement of 15 to 20% hike in our NPS through concerted efforts. We've done deep dive analysis. We were talking about numbers right now in terms of, if there's, we're getting a bad NPS for a product, is it coming from a particular warehouse? Is it a product issue? Is it a warehouse issue? Is it a product market, fit problem? So, what a customer expects from the product for the price point they're paying, and they have a separate expectation. So deep diving onto that, right, solving for the, customer misconception or a bad product or a bad service. I think that's something that we've focused very largely in the last 6 months. We've seen our CSATs improve, our NPS improve, and we've been able to attack problem and see a, huge rise in retention across parts of, areas that we've had problems on.
That's very heartening to know, Halin, that this actually delivers results. Ankur, this whole retention bit and where you have a larger play, does it have to be largely on the B2C side, or B2B also? It can also pan out. Thanks to the data and the predictive analysis. How do you solutionize that segment of the the startup community?
So, B2B is a slightly different ballgame. We are a B2B company, so when we acquire customers, we would love to retain them for multiple years. So the solution side of this ecosystem operates very differently from that ecosystem. But at the same time, when you look at places like industry buying or places like Moglix, which are B2B e-commerce platforms, this is right up our alley because they're treating a very large volume of small ticket size customers. So their playbook is very similar to what a Myntra or a Flipkart does from a retention and engagement point of view. So that's where the effort to acquire a new supplier or acquire a new customer, and it's two-sided marketplaces, right? So you need to be dealing with a large supply ecosystem and you need to deal with a large demand ecosystem. On both sides, you have to have multiple interventions to make sure that people who've come on board once stay with you, continue to fulfill their orders, continue to place more orders, and so on. So by all means, all sorts of predictive modeling would aid finding out the right kind of customers who will stick around, who are likely to churn, who are likely to become bigger, and we can enable all of the segments for B2B e-commerce players also.
Sure. Thanks, Ankur, for that. I think we are heading towards the last leg of the conversation. Halin, you have already reaped benefits of certain, retention focus that you have, delivered. What's your ask going forward from technology partners as to what will be the future? What is it that you wish to achieve, and where are the gray areas, the gaps which are yet to be addressed and needs attention, so that your overseas dream, your, even the growth within the country, is on the right track. Any thoughts on that?
Sure. So, Samita, I think one of the things that all of us are grappling right now is Gen Z. Very, very different, as a customer cohort, if I may say so, from the times that maybe, Ankur and I come from. I think I can say for both of us, right? And, the Gen Z, the kind of expectations they have, the kind of freshness that they want, quoting somebody here, right? That's very different, right? So, if I, as a marketer, if I make a cohort today and I expect that, the kind of personalization to happen for the next 6 months, 8 months, 10 months, no. So I think the one big ask from technology, from data point being hyper-personalization. And hyper-personalization at scale and something which is very agile, something that can, help the marketeers as and when the data changes, as and when, the Gen Z changes their mind. We know about it, maybe we are 2 steps ahead of it, and how can we make our marketing even better? So I think that's the ask that, the marketers would definitely have.
I can see Ankur smiling at this because I think that's the biggest oxymoron that you are here to, solve.
No, not really. It's in fact something we're working pretty closely together with the Maglam team on addressing the whole real-time aspect of it, right? When you want agile, you want something that happened a few seconds ago to be able to deliver an experience within seconds. So if you go to an Amazon or a Netflix, which is typical homegrown for anybody in the Gen Z that she's talking about, they're very used to a certain level of experience. They're very used to that level of personalization. And you should be not surprised at the level of data that these platforms are available to absorb, process, and give you that real-time response. Now, as a company, you would not end up building all these capabilities in-house. Some of the larger players also don't do this in-house, which is where working with a partner becomes almost, next to unavoidable to really deliver on these expectations. Because if you, for instance, visited a website, spent some time on a certain product, and 30 minutes later you left that kind of platform, now the next time you come here, if this is shown up that, we know you were spending time on this, maybe you want to consider it again. It saves you 2 clicks. And for a marketer, the saving of those 2 clicks is almost like, 30, 40, 50% drop-off saved. So that's why there's a massive value to doing these incremental interventions and using data in real time to deploy content in real time, right? So it's just almost unavoidable in that sense.
Sure. We almost there at the end of our timing, but Ankur, any, parting thoughts for new founders and everything as to which are 3 areas that they should focus on? You say that retention should be day 0, right? But even in that, what are the 3 principal aspects that needs to be covered because they will be otherwise all over the place, right? And you have helped so many of your customers, right? So both from Harleen and Ankur, those 3 critical aspects that have to be taken care of.
So I can think of 2 pretty quickly. One is the data setup. So one of the things we tend to try work really hard on with customers is to get the entire kind of data they can collect in the perfectly designed fashion upfront. Because if you're not collecting your data properly, then it will not be actionable, it will not be useful, and 4 months later, you will still kind of struggle with some pretty basic stuff. So that's part 1, get your data models set up correctly. The second thing which most companies should think early in their game is retention is a play between both product teams and marketing teams. So product teams, I say so because they are much savvier with respect to creating automation and triggers and all those ways by which campaigns can actually start moving on their own without a marketer pressing a send button every morning. Because typically what tends to happen is when marketers play this game purely on their own, they will look at writing great copies and sending a bulk campaign to a large number of people. When a product manager or a product marketer looks at this problem, he at least has a better appreciation of what kind of triggers should deliver what kind of personalized experiences. So we strongly recommend companies to deploy a combination of product teams and marketing teams to solve the retention topic. I think those are my 2 inputs. If you solve for these 2 properly, maybe it'll be time to talk about the 3rd.
And I believe at times the reverse also happens. The product team says that, oh, we have made the best thing, you go sell it now, right? So there's nothing wrong with our product or service, right?
Sure.
Harleen, any learnings that you've had? You did say that how you have benefited, but some things that you didn't focus maybe when you started, but key, parting thoughts that you'd want to leave for all the founders here as to what is to be focused from day 1, if it has to be the day 0 problem.
So Sumita, I think for a day 0 solve, as a founder or as a early member of a marketing team, the first critical point would be to understand retention. It is very, very different from an industry to an industry. What we see in an e-com versus how we would see in a B2B setup, right? So I think that's the first thing. So when I talk to certain colleagues of mine, what I understand is that retention per se is very different how we see in e-commerce, in a B2B setup, in a B2B2C setup. So one is get clarity on sheer cohorts, the numbers that you're chasing, the CAC to LTV that you're chasing. One is get that clarity, and second thing is set up a system to understand and capture the voice of customer. Right? That is something, once you move away from the PMF, that is something that will always help you in terms of really knowing, where, in the entire gamut of customer journey with the brand, are things breaking or adding to the delight factor. And that's something that you can solve for or, help propagate further. And I think that is going to help on, improving on the customer retention.
So using at least having a clear view of who are the customers that you wish to chase at the end of the day, right? They could always be outliers, and it's not that you will be running after any and everyone who, you acquired at the first step.
Absolutely.
You will have to, there will be a percentage of churn at any point of time, right? Yeah. Great. Thank you, Harleen and Ankur, for your insightful, comments. I think retention, of course, everyone knows that, it has to be important, but yeah, making it a day 0 problem, I think solves a lot of issues which people realize way later, and then they're kind of scrambling all over the place, right? Thanks.
Yep, I'm pretty glad that this is a mainstream conversation on a forum like this now, because 3 years ago, this was not the case. So yeah, all for it.
Thank you. Thank you so much. And thank you, audience, for being patient.
Thank you. Thank you so much for such a powerful discussion. May I request all of you to kindly come together for a group picture. And Sumedha, I would request you to kindly present a memento to Harleen and Ankur. Thank you so much for sharing all your insights, knowledge, and experience with all of us. How we can use the power of data to retain customers, which should be much more comprehensive and personalized. And as Harleen said, it should be at all the levels, from supply chain management to even customers. Thank you so much, Harleen. Thank you so much, Ankur. And thank you, Sumedha, for such a wonderful moderation. So with that, we are proceeding towards our next session. For the same, I would request our team to kindly set the stage. The next session is going to be on technological leap. We are going to talk about artificial intelligence, we are going to talk about Internet of Things, and so much more. So when we speak of AI, there is this one very powerful AI that has been the talk of the town, ChatGPT. How many of you here use ChatGPT? Give me a raise of hands, honestly. Wow, 1, 2, 3. Anybody from this side? 4, 5, 6. Well, I'm really looking forward to know the use case. For what all purposes have you used ChatGPT yet? So who all raised their hand from this side? Can we just do it again? Fabulous. All right. Starting from this table. Hi, sir. Please introduce yourself and your use case.
Yeah, this is Bikhchandani from Vulcan Software. Well, amongst other things, one of the things I used it for was to ask, my wife is a teacher in an international school. So she had a problem and she refers to me. So this problem I could not solve. I put the problem on ChatGPT. It worked it out in seconds. It gave a correct method, but the answer was wrong. But I was amazed by the working which it gave. It helped me to come to the right solution. So it is good. It is damn good. Yeah. But it did help you. It definitely. It is very good.
Great. Glad to hear it. So from that table, hi. May I know your name, please?
Yeah. My name is Aprup Sheth. I'm co-founder of Numeric. So when ChatGPT started out, we use it with our team for social media and our marketing campaigns. So, wow. And a lot more.
Wow, that's interesting. See? So many different use cases. And with that, ladies and gentlemen, we are proceeding towards our next session. A very interesting panel discussion lined up. So as we just spoke of AI, we are going to take it further up a notch in this session. So with the rising complexity of IT systems and the inception of a broad range of new technologies, startups and enterprises are undergoing challenges such as cybersecurity, data governance, capacity building, resources management, revenue-based issues, and so much more as they try to survive in the modern competitive business landscape. So the question is, how will organizations dedicate the energy, focus, and resources to help win the most important battlegrounds, to continually closing or leapfrogging the technological gaps? So to enlighten us on the same, we have a diverse set of panelists joining us up on stage. Please join me in welcoming Aanchal Saini, CEO and co-founder, Flyrobe and Rent It Bay. Vipul Sharma, founder and CEO, Checkbook. Akshay Gulati, co-founder, Global Expansion and Strategy, ShipRocket. Vivek Sehgal, country head South Asia, Alibaba Cloud Intelligence, India. A very warm welcome to you. I would request you all to kindly have a seat at the dais. And this session will be moderated by Aparajita Puri, partner, McKinsey. Handing it over to Aparajita.
Excellent. Thank you and good evening, everyone. So we're here to talk about technology, when technology is pretty much our life. So, I was thinking about it before this session, that the format and the conversation is to focus around how technology is impacting businesses. I think for most of the folks here, their business is technology, right? So the boundaries have become so blurry. We're talking about AI, we're talking about experience, but honestly what we're delivering and what these organizations and these mammoth businesses are delivering on a daily basis is changing the way we look at these businesses, if you will, right? So just to get us started, I think the last 5 years or the last decade has seen ubiquitous adoption across a broad range of technologies. Talk about cloud, and Vivek here can, school us on the topic. Talk about AI or data, and I think all of you all are starting to see that impacting your business. Talk about just customer experience, IoT, cybersecurity. So it's changed the way we operate. So maybe just to start this off, Akshay, Achal, tell us a little bit about how you all have adopted technology in your businesses. How has that changed the way you're delivering value for your customers, but also how your employees are embracing that change?
So for us, to start with, we had to do our custom built technology because there was no precedent. We went to fashion rentals. So there was no company renting fashion online in India. So we had to develop it, understand the processes, and develop our custom ERPs on our own. With respect to how our employees and customers are work functioning, so rentals is a very operationally heavy game, which means it's not like a simple buying. You go to a website, you make an order, it's delivered to you. A lot of processes between placing an order to delivering the customer, like alterations, reverse logistics. It's like a hotel booking system where one asset is booked by multiple people for different durations during a similar season time. So all this was obviously a challenge to build, and initially obviously we had to understand the business. We had to rebuild a lot of things. To start with, I'll tell you a small anecdote. The day we launched our website, within a span of 5 hours, we received about 45 orders, and we were shocked. And that time we were renting Western garments, like a garment which is MRP'd at between 5 to 10,000, we were renting it for 3 to 500. So all of these orders, 90% of those orders, people thought they bought the product. So we had to shut down the website, revamp it, put rentals everywhere, and then start again. So this is one. And secondly, I feel, of course, technology has helped us in a big manner because this business is a mindset change business. People are aware about fly-rope stores, whether we are renting it online or through physical stores, because of technology and the scale it has. Vice versa too. Customer from Indore wants to rent out their own product to a Delhi customer. That is possible because of course, technology.
No, absolutely, and I'll add to that in terms of, for Shiprocket, technology is our business, right? We're using technology to make logistics more efficient, and that's literally our purpose every day. And I think with the advent of new tools, with the cloud and many more developments happening, we've been able to use technology to remove what I believe is asymmetry of information. Because I think the biggest change that I've seen in the last 7 to 10 years across industries is that information has become more transparent. Today, as a customer, if I order something online, I want to know where everything is. The Amazon shopping experience has changed the way we behave. And SMEs and smaller merchants in our country don't have that technology readily available. So I think being able to build a platform that's been able to use data to be able to provide transparency of information has been really key to our business. And it's gone to a point today that one of the biggest challenges that used to happen in online delivery was a delivery boy is coming to your address and the person says customer not available. Yeah. And if you are sitting at home waiting for that product, you get really pissed off because you're sitting at home and you get that message saying customer was not available, and you're saying, I've been sitting here for the last 3 hours, when was I not available? And today with technology, like at Shiprocket, we can even consume lat long of the delivery person on a real-time basis to know whether that person was near your location or not. Right? Because a lot of times phones don't connect, you did not pick up your phone, so there are multiple use cases why that delivery could have failed. And what we've seen in terms of customer satisfaction, especially for our merchants, is that if you can objectively tell the customer, you know what, this person was there and they could not deliver because of this reason, the customer satisfaction goes up multiple fold. And I think using technology to remove that and to create that transparency of information has been really critical to the way e-commerce has grown, to the way digital adoption has grown. And today, I as a consumer do not feel scared buying from a website I may not have bought from before. I don't feel scared buying from Facebook, WhatsApp, because I know that using a platform, and ShipRocket is one of the many tools out there. There are many tools which have made this very easy. I can get a product. If I don't like it, I can return it. And this entire process can literally happen within 48 hours. And I can get my money back into my account. So I think building trust in the digital ecosystem, removing asymmetry of information, technology has really changed our business. And I think when we started out, we could not even imagine that adoption would have happened at the pace that it's happening now.
Well said, and so very true. I think asymmetry of information has completely gone away to the extent that almost every event is now getting recorded somewhere or the other. Vipul, maybe on that note, there's been a lot of chatter on ChatGPT, and that takes away asymmetry of information at altogether a different inhuman or a non-human level, right? How are you all seeing the potential of adoption of generative AI within each of your businesses, and how do you feel you can contribute to that ecosystem in India today?
Right. So I think AI is more like an operating system, and I think Gen AI is a very sophisticated operating system, and I think a lot of use cases will be around making things easier for people to, within companies to consume data and infer and make inferences, right? So I think that's one of the big use cases. So, if you're using Notion, and I've been using AI on it for some time, but if you can get it in Google Docs and actually create a product requirement document, create screens in Figma, pretty much using Mid-Journey without having to have anybody in between, and then push it off for coding. Some of the coding can also happen by ChatGPT. So it can speed up development times a lot, and also help in brainstorming, because a lot of times people in product and technology can use it to brainstorm and come up with better ideas. So I think there is a lot of changes that will happen in the next, and it's going to happen fast. It's going to happen in the next 6 months, 1 year. Under 2 years, you'll be looking at a very different model in which you're going to be working in than you are today. So I think that's like a big change over the next 1-2 years, and the adoption speed of adoption is the fastest ever, and it's going to make differences within internal processes, internal systems, and also make differences to the customer's life as well. You can literally, I work in financial services. If you have Gen AI being able to, a customer being able to tell, an app like our app, just transfer money to XYZ person and confirm once it's done. It doesn't have to use any UPI PIN, or it doesn't have to do an NEFT. It just happens. And I think that's where, the future is. It's exciting and it's terrifying at the same time.
True. Very, very true. And Vivek, I want to pull you in here. I think we're all consumers of technology in our everyday life and in our businesses, but you're playing a role of enabling technology as well. With all these changes happening on the Gen AI front, with a lot more in-depth verticalization itself happening of the cloud stack, how are you seeing your role, or an enterprise's role in sort of furthering the agenda for all these startups and the broader ecosystem?
Right. So a fundamental shift that's coming, given that the cloud adoption has reached the kind of maturity that it has reached already. Every industry, the Unicorn and Unicorn, the industry that they are working in, they are looking at cloud to solve solutions of that industry. For example, in logistics, we talked about the faster delivery. They want cloud to provide that solution. Today, if my average delivery time for a package is X, how does technology, the AI technology of cloud, helps me reduce that? If my consumer is taking X amount of time on search, how do I reduce that? And that's where Alibaba Cloud as a technology, we provide solutions which helps that. Just to give you an example, with the panel that we have here, the typical scenario that happens, if you are a consumer of the app and you are looking for something on the first page, by the virtue of me having the technology, having the intelligence, I will personalize the homepage so that when I come as a user, the app already recognizes me from my previous behavior and gives me that relevant homepage, not the generic homepage, which helps, one, the stickiness of the consumer, and that is all being driven through the AI, and that's how the technology is enabling. Similarly, logistics, giving the shorter routes, faster routes. In the lending side, we ourselves, we have Alipay, which is our own business unit into the lending. We have 3 minutes without any intervention, loans being dispersed right from the point the user comes in, which is his recognition, validation, and credit check, and then that is the kind of solutions every industry that's going through in these unicorns. They want that enablement from the AI and the cloud provider. They want, okay, I'm already done with my infrastructure, give me intelligence. So if you see, even our Alibaba Cloud Group, internally we are called Alibaba Cloud Intelligence. The cloud is only for intelligence for the business that's there. That's the key fundamental shift with regards to technology provider giving enablement that each of the co-founders or the technology heads are looking at. Give us intelligence for our business.
Yeah, very fair. Actually, maybe to you, how do you see India's role in taking pieces of these technology, like you said, intelligence or verticalized propositions, and all the innovation that's happening in this country? How do you see us shaping global propositions for startups and for other economies more broadly?
As you were discussing outside, the UPI, that entire system, UPI payments, is a phenomenal technology that India has built, and also moving towards international payments acceptance. And we compare this to, say a US, it is still not unified there. Individual players are there. Once a drawback, there would be a problem. And I feel the entire decade in terms of technology, startups, and growth has been phenomenal. Small things like, if I specifically, last point, I just wanted to continue that discussion on ChatGPT. For us, it's a very positive aspect of that and a negative aspect. Positive is that, if you want to understand, social media team is working on something, what reels are doing well, what kind of content we should produce, all that comes in handy like that. Negative when it comes to information, like data sets are not available sufficiently. Like, for example, fashion rentals, what's the growth like in the last 5 years, couple of years? That kind of information is not available because probably there are very less online rental platforms right now. And our data itself, we can generate information like from Jaipur is one place, how many people were renting in 2019 and how many people, what's the percentage growth organically, etc. So I feel right now it's a very nascent stage, but yeah, it's a developing part of it. Coming back to what you were talking right now, so huge potential. For example, currently we work on, when we inbound inventory, we work on trends, we work on what people want, we work on what kind of searches have been made, what colors are in, that kind of data is available with us. But what people would want in future is something that can be built. And there's huge scope for it now. Like, I am 6 feet tall, I like these colors, this is what my idea of a new outfit would be. So I think futuristic fashion can be built here.
Yeah, so you said two interesting things. I think number one, you said every technology has its pro and con, and we are at the time where we'll have to weigh that to address it. And I think the second you said is that India is a developing economy. There is a lot of data generation that's happening here, which can potentially inform choices that are being made more globally as well. I just want to pick up on what Achal said and toss it over a little. Look, technology always has been core to each of your businesses, but we're also in the times where profitability costs are being looked at with a very keen eye. So do you think this is going to change the way we think of the ROI from technology investments over the next few years?
So I'll take that first, and I think actually it's just going to put a more laser-sharp focus on it. I think technology is all about helping us build efficiency into the systems, and efficiency can only be good for ROI. While in the short term it may be an investment, and it is an investment, I don't think of it as a cost. So I'll give you a critical example in terms of our business, right? So we're using generative AI at a very early stage. We're using it for content marketing already from an external point of view. From an internal point of view, one of our stated objectives is to reduce the kilometers per parcel for delivery, both from an economics perspective as well as from an environment sustainability perspective. And today the biggest challenge around that is demand planning, because crunching huge sets of data for thousands and hundreds of thousands of clients is just not possible. You want to tell your client that, oh, you know what, they should be able to place the inventory across 17 warehouses or 6 warehouses across India. Now you tell a person 17 warehouses across India and they're an SME, they'll probably laugh you out of the room. And you tell them, I can place your inventory across 3 warehouses with a 90% delivery within 3 days, reducing the kilometers driven, the cost of delivery, you'll probably sign up that client within 24 hours, because it makes both financial sense as well as environmental sense for us to do it. And I think earlier we were able to get to the 6 warehouse, 7 warehouse answer, because with tech, that is as far as we could go in terms of accurate predictability. What we're now testing generative AI, for example, as a technology, is to be able to get to an even better answer. How can I place inventory across 3 warehouses for a 90% 2-3 day delivery? And I think their adoption of technology is going to drive ROI in the long term in a tremendous way possible, right? And I think it's good for us to adopt it, it's good for the environment, and generally it's going to make businesses far more efficient. So it's very seldom that I've seen technology adoption and ROI not be a part of the same sentence and be opposite parts of that sentence.
I'll add on to this. For us, of course, as I mentioned, there was no precedent. So we were the first ones doing rentals online. So first half of the decade, initially, we spent a lot of money on technology, and we were revamping the technology because things did not work for us. And we had no other way. It wasn't like we'll do an offline business for 2 years and then develop technology. That wasn't an option. So first half, I think a lot of money in terms of ROI, the return wasn't good at all. But learning was there. And you know, those years spent in learning were super, but today when we develop something, so we know this is proportionate to the kind of earnings we'll make in the future.
So you get better at being able to identify where there's value and where there potentially
specifically to new industries, like where there have been no precedents. So when you're developing technology for anything new which you're still learning your ways through, you'll end up obviously wasting some money, but against, of course, the positive aspect is you learn.
There's an interesting thing here, because you know I come from financial services, which is one of the oldest industries, but the realization in India, for example, the fact that we have a lot of digital public goods, Aadhaar, UPI, etc., is second to none in the globe, right? So we have light years ahead of everybody else, and I think that's one very important aspect which allows companies in India to build stuff in financial services which would take maybe substantially longer time in any other country. So, for example, we've spoken to Vietnamese startups who told us that we're not even able to verify the business that a customer does because they don't have something like a PAN over there. Whereas over here, not only do you have a PAN card and a PAN number, but you can also digitally verify it on the fly, instantly, right? So I think that solves a lot of problems. And then you can essentially, your identity, your KYC, all of that stuff is sorted. And then you just have, the secret sauce then becomes things like underwriting, fraud management, how are you building on top of all of these things. And I think that's a wonderful situation for us to be in India. It's better than any other country in the world. Trust me, I was at the Singapore FinTech Fest a couple of months ago. They are 20 years behind us, everybody in Southeast Asia. Even China does not have anything like UPI at the scale at which we have it. So I think that's wonderful. The other aspect is, so it can go to other countries, and it is of course going to other countries. I think the other aspect is because of the population scale problems that we've solved here and the kind of population that we have, there's a lot of things that we can take from here to Southeast Asia, to Latin America very easily. I wouldn't say Europe or the US, primarily because they have a lot more regulation and they are also, interestingly, more closed economies when it comes to financial services than, let's say, we are. So from that point of view, more difficult to go there, but definitely Southeast Asia, LATAM, put together has almost the same population as India. So in a way, you are expanding and becoming two Indias. So there's a ton of opportunity in these spaces to build from India to the world.
Thank you for that, Vipul. So India leading the decade, essentially, is what you're saying. Any closing thoughts from the panelists? I think it's been an interesting, intriguing, candid conversation. Any closing thoughts?
I would just like to talk about, you touch base on profitability, right? And that's being talked about with more now. When we look at ChatGPT, one of the things that should be looked at is, yes, ChatGPT, and yes, we get some outcome, but the kind of infrastructure that's required to run behind. You know, you need high GPUs, lot of processing that we talked about. So ultimately, while we can get excited and start with it, it will again boil down to a scenario when everybody will ask, okay, I'm getting an output, but at what money, what cost that I'm spending? So that's where technology enablers like us will help in. From our side, what we do is give the flexibility of using shared cluster of GPUs and not being dedicated, and start with that journey, see the results if they are there, and that's how you kind of achieve the profitability. While you get the gain, you keep the cost in mind and make sure that while you are getting the outputs, it's at the right cost, which are not burning you just because you are getting a benefit out of it.
You know, just in response to this piece, right, I think one of the things I've realized, I'm a first-time founder, you know, started Checkbook a couple of years ago. One of the things we agreed on initially is that we wouldn't take shortcuts on technology. So I think I see a lot of people in India, you know, sort of plugging into somebody else, like a provider or whatever it is, but it just shows that you're not building for the long term. So in our case, we actually built our own CRM, we built our own LOS, we built our own data warehouse, you know, all of those things. And obviously we needed cloud for that, right? And we leveraged cloud really well. And that helps, you know, and like you said, right, it's an investment. But it pays off really well because the incremental cost, you're not paying anything except cloud cost and, you know, running the calculations and so on and so forth. But it really helps. So I think from a startup founding point of view, it is always better to build something yourself and leverage cloud a lot more than sort of plugging into a data provider or service provider, which seems like a shortcut. So if it seems like a shortcut, it is a shortcut and not a great thing for the long term.
No pain, no gain.
Couldn't agree more. And I'll just add one thing. I think outside of we're talking a lot about, you know, generative AI and all of those things, but I think there's a lot happening across the country right now. For example, UPI has been a game changer. And for us, when we think about e-commerce now, the Open Network for Digital Commerce, yes, ONDC, is going to be the next game changer, right? And that probably would not have been possible a few years ago. I think it's the right time. I think technology has evolved and the adoption across India has come to the point where it can actually be applied at, you know, at a mass level. Yeah. Because the technology, we sit in Delhi, slightly larger companies, we are tech companies, we have access to a lot of technology. But when I go to tier 2 cities, tier 3 cities, the way technology is changing lives there, that is the true power of technology, right? We may use AI to power our data sets to make things fractionally better, basis points improvements. But there, you know, when as we participate in a lot of the ONDC events, we see technology actually changing businesses, changing lives. And for me, that's the true power of what we're seeing. And it's the times that we live in. Had this happened 10 years ago, maybe the adoption would just not have been there. So I think for us, the time has come and the pace of adoption is going to be at a pace that we've never seen before.
Absolutely. I think for us, the last decade has been phenomenal because as we, you know, it's a mindset change business. We are converting buyers to renters, which means like 8 years ago, our target customer was an aspirational class person who wanted to buy something and because of affordability reasons, they were renting. But today, it's the millennial. And they make this choice because of sustainable sustainable elements, plus obviously awareness is high, etc. So from the consumer point of view, I think that organic transition and the mindset change has happened because of technology and the scale it reaches. And at the back end also, we are able to scale because of technology, of course. In fact, the entire warehouse, every department is controlled with separate dashboards, etc. Without that, it's not possible to scale such an operationally heavy business.
So in fact, just one final point. In fact, in banking, earlier, banks used to be trusted on the basis of the size of their buildings, right? I am sure people have known about this anecdote. So that's why banks have headquarters which are very glitzy and big, and they'll put them on their checkbook and all that stuff. But today what has happened, and we saw this with checkbook as well, the entire trust has moved to how well does the app perform. And that's the paradigm shift. How well is the app perform? How stable is it? When I do a transaction, does it go through? And that is really the measure of trust that has happened. So trust is not a function of big buildings and the size of your balance sheet and so on and so forth. Trust is really about how good is the app, how easy is it, how reliable it is. And that's an amazing shift, and it's happened largely because of UPI in this country, because today in UPI, you don't really care which app you're doing it through, right? Most of the times. You don't care which company's QR code is on the, on the merchant's shop, right? You just make the payment, it's done. So I think that's a huge shift which has happened, and I think that's all because of the way people consume and use technology.
Yeah. So it's not just changing businesses, but it's changing lives, changing the way you make choices, and changing preferences in a meaningful manner. Thank you for a very enriching discussion across all spectrums of how technology is impacting your businesses, your employees, your customers, but also how you're starting to think of trade-offs of where to invest, where not to, and how to sort of make it sustainable as you're power through in each of your businesses. So thank you so much. Thank you. Thank you for being a great audience.
Wow, thank you. Thank you so much for this great discussion. May I now request Aprajita to kindly felicitate all the panelists. Anchal Saini, CEO and co-founder, Flyrobe and Rented Bay, thank you so much for sharing your perspectives. Vivek Sehgal, Country Head, South Asia, Alibaba Cloud Intelligence India, Vipul Sharma, founder and CEO, Checkbook, Akshay Gulati, co-founder, Global Expansion and Strategy, ShipRocket, With that, can we please hear a big hand for the entire panel for sharing their valuable insights with all of us. Thank you so much once again for giving us your time today. With that, ladies and gentlemen, moving on to the next part. We learn new things every day. So it's time to add one more to your already extensive knowledge base. We have another interesting factoid coming up right on the screen. Let's have a look at that. That is definitely something to think about. And basis this factoid, we have coming up another fireside chat session. I would request my team to kindly set the stage for that. The attrition rate in India has surged to 20.3% in the first half of 2022, from 6% in 2020 as per statistics. So companies must rethink their ways of working to formulate new strategies. Otherwise, talent retention and attrition may become one of the greatest hurdles of today's time. And right now, to share their perspectives, to shed some light on this topic, we have our expert set of panelists, our expert set of speakers joining us up on stage. Please join me in welcoming Kanika Tekriwal, founder and CEO, Jet Set Go Aviation Private Limited. A very warm welcome to you, Kanika. Please have a seat at the dais. Let's welcome Neeraj Singh, founder and CEO, Spinny. Thank you so much, Neeraj, for joining us today. And to extract the perspectives and drive the conversation further, we have joining us Ritika Mathur, Partner Human Capital Consulting, Grant Thornton Bharat LLP. Handing it over to Ritika.
Great, thank you so much. Thank you and welcome everyone to this fireside side chat with two of the most successful startup founders in the game, Kanika and Neeraj. Thank you so much for taking out the time. You have been trailblazers in your own game, right? You have not only set up very successful enterprises, but have also built amazing teams from the ground up. And the idea today in this conversation would be more to hear from you, your experience and your insights into what has gone into really setting up these very successful teams. So without much delay, I know we don't have much time. So Kanika, maybe I'll start with you. You are a part of a very niche segment, right? So obviously, the kind of skill set that you would need, I presume, is also very, very niche, right? And therefore, attracting the right kind of talent, but also grooming and mentoring them to stick around in the organization would be paramount for you. So would love to understand a little bit in terms of what has really helped you in terms of grooming and retaining some of these key performing talents in the organization, particularly through the very difficult pandemic period.
So, I think, thank you for having me here. And I think we're one of the most people-centric businesses. I run a private jet company, and, my planes can't fly by themselves. You need pilots, you need engineers to fix them. And there's nothing planned in the business we run, as against a scheduled airline where a pilot has a roster, he turns up at a certain time, etc. We're an on-demand service. So, sometimes you get a call at 2 a.m. to fly a flight at 5 a.m. and you've got to make it then. It's not only the pilot, it's the cabin crew, it's the engineers, it's the ground staff, it's dispatch, it's operations. There's a whole lot of people that go into making every single flight possible. And we are a very, very people-heavy business. There was a report which recently said that India is going to have a shortage of over 50,000 pilots in the next 5 years, which makes me not only worry, but wonder what are we doing to really bridge this gap. And that's what gets me to what we do at the, at the heart of Jet Set Go, which is we've always, honored and respected what people bring to the table. I'll give you an example that during COVID, when the first lockdown happened, the aviation industry was the first industry to lay off people, decrease salaries by almost 50%. It was the most affected sector, if I can say so. We were the only aviation company that didn't lay off a single person. We didn't, cut anyone's salaries. Even people who were, say interns, management trainees, everyone from driver to director stood where they are. And why I took this decision was I said, we're a profitable company. When we were making profit, when we were doing well, did we go and tell our team members that, look, I'm doing very well thanks to your hard work, so here's all the profits, so share it amongst yourselves? What gives me the right to, take away their livelihoods when I'm not able to earn money because of a risk that I have taken as a promoter, as an entrepreneur, as an individual? I'm duty-bound to take a lot of care of these people who've entrusted their lives in me. And I think that's what's made the biggest difference to us so far. When the first lockdown opened up, there were few selective flights allowed to operate within India, special mission flights. And every other private jet company had a situation where pilots didn't want to turn up, engineers didn't want to turn up, ground staff didn't want to turn up. All our workforce turned up the first day. I'll never forget that sight. Everyone came to the airport looking like astronauts. They were literally wearing these huge hazmat suits and everything and ready to fly, very driven. And I asked one of my very ground level, ops guys, I said, what happened? How come you're here? Aren't you worried? You live with a family, you have parents who are very old, etc. And he said, ma'am, what you've done for us, we can't, the only way we can repay is by being there for you. And, I think that's what made me realize that if you, respect and value the mental health and well-being of your teammates at the toughest times, there's nothing that can stop you, from building the greatest business that you're set out to build. I think each employee, each team member that works for us is directly responsible on an average for 4 people's livelihoods. Either it's their parents or their kids or their wives and their kids, etc. So if you disturb the livelihood of one single person, you're technically impacting the livelihoods of 4 people. And the moment you start looking at it in that circle, you automatically start taking the right steps. Mental health is something, that's almost taboo in India still, although people are talking about it. But it's still Bombay, Delhi, Hyderabad that's probably acknowledging mental health, and maybe 20% or 30% of the companies. To us as an organization, mental health is very, very important. We, after the pandemic, got on board a lot of people who can talk our teammates through the challenges they were facing. We realized very simple problems. There were teammates who lived in a 1-bedroom house with 6 people. They found it difficult to work from home. Now, this is not something a team member is going to ever come and tell his leader or boss. But when you put psychiatrists there to talk to these people, understand what they're going through, they open up to them, and then you get data as to what can you do. Give the team member a chance to work from office if he or she wants to. Very simple fixes, I think, can help. And I think the key here is acknowledging that every single team member of yours is a human being, and going out there and being there for them is very, very important.
Great. So if I can just summarize that, there are 2 things that stand out for me there. So one was, of course, looking at a principle of people over profit, probably, right? That is what helped you really drive that loyalty. And second, also bringing in more flexibility rather than your policies being rules, them being guidelines for your people. Did I get that right?
Absolutely. And I think you put that very well for me, because policies are a very 20-year-old trend is what I believe. I think, there's no one size fits all. And the moment you bring in flexibility into an organization, you'll see performance peak higher than you've ever imagined it to be.
Great, great. Thanks, Kanika. It's lovely to hear, founders saying that. Neeraj, let me come to you. You started with a very small team, and when we were talking backstage, it blew me away that you mentioned that between in 2018-19, you had 100 people, and today you stand at almost 7,000 people. That's a phenomenal growth. So you also started with a team that probably didn't really come from the traditional automotive segment itself, right? So really would like to understand from you, what are the skill sets and the experiences that you really looked at when you were building your team? And through the course, how is it that you've developed and groomed them to really be successful and grow with the company?
Yeah, thanks a lot for having me here. We are into business of selling cars, right? So at Spinny, we sell used cars online. And we understand that car buying is very special, very important for people. Lots of dreams, aspirations. So we really understand that it is a very important purchase for people, and it was completely broken. So if we are able to solve for this purchase, then given the speciality of this purchase, right, we have a clear shot at building one of the central brands in the country, because by solving for this purchase, in a way, we are also solving for trust and experience. And that is the kind of vision we have, right? That we want to build Spinny as one of the most trustworthy brands in India, one of the most experience-sensitive brands in the country. And when we basically evaluate anyone from, from a potential team member point of view, then there is a lot of focus on, on checking that is that person has the same level of, excitement to solve this problem statement. Is that the empathy level, for the problem statement of the customer is same or not, right? So there's a lot of focus that, the people who are joining our team, right, there is a lot of alignment and the commitment to the vision and the, excitement level to solve this problem statement is same, right? So if the realization, if the gap is not there in the realization, then lots of, things, start getting solved on its own, right? So there is a lot of focus that, that relatability with this particular problem statement should be there, that helps, bring alignment. And if the alignment is there, then your job is very easy now.
Right. So what I'm hearing from you is, one, looking at people with that mindset of solution orientation, and secondly, also the cultural fitment of the organization, alignment with the organization values.
Yes.
That's what you really look for.
And to further facilitate that, the kind of culture we follow internally, right? If you are trying to solve for trust for your customers, then you need to solve for the trust internally first, right?
Sure.
So, and that should mean that you should not struggle while delegating, right? If you're struggling to delegate, that means that you're not able to trust your team members, right? So there are lots of, basically small items like that, but there is a lot of focus that we build right, conducive culture internally first, and that translates at every touch point we are trying to create with our customers.
And, in parallel, how do you balance, Neeraj, that need for developing talent internally and then getting talent laterally as well? How do you balance that, because I know whenever you get, it's important to get the right kind of talent from outside as well, but, in a growing company like yours, wherein people have been very loyal for a very long time, how do you balance that internal dynamic?
For any new opportunity, the internal team members typically, have the first right. So it's great for them, and it's great for company also, because they already understand the context. They have understanding of the processes, the problem statement. So the culture internally is such that, inter-department horizontalist integrations are already there. So when we plan any, internal movement or, promotions or something like that, that's always, easily doable. So we have built our entire processes and structured our org like that. So it is a clear, it is a basically clear, I would say, perception, and it's obvious to everybody that internals will have the first right to new opportunities, right? And for anybody, right, it's not just about the monetary benefit, right? So of course the value creation and the monetary compensation should be, really exciting. But on top of that, learning is also very important for people, and then they should get exposure of, the 360-degree exposure of everything going inside the company, right? So, and if you are making everybody a part of that learning journey, then for new opportunities also they have some kind of first right. But that does not mean that you will compromise with the requirement. So the compromise should not be there, and if there is no compromise, if someone is ready to take up something bigger, then that is of course the first preference for us, and that is helpful to basically in execution also, because if you're bringing someone from outside, then the learning curve and the time to start basically delivering as per the expectation, all those things, all those inefficiencies you can bypass. But at the same time, you need to keep injecting talent from outside also, so that the right balance is there, and the cumulative, I would say, exposure and the wisdom of the system is only going up.
Sure. So very, very useful to hear that. And I think now to you, Kanika, I know this is a topic that's very close to your heart, which is about women leaders as well, right? You're one of the most successful self-made entrepreneurs, the youngest self-made entrepreneurs in India, and probably the youngest female to do that as well. So how important is it for you to develop women leaders in your own organization, and any success stories that you would like to share with us? We'd love to hear that.
I'm going to tell you about what happened at my first sales pitch. So I was very young, I was 21 or 22, and I walked into this corporate, very fancy Delhi corporate, walked into this really outstanding boardroom. There were about 8 people seated there, and I was the last person to walk in. I was the only person who was going to pitch. I just started my company. We were, I think, 3 people. I used to answer the phone with different names to act like it's a very big, cool company. And I walked inside, and the person, the owner of that business, the promoter, actually, pointed at me and said, "Excuse me, miss, can you ask everyone if they want tea or coffee?" And I think all my motivation went, flying flat right then. I wanted to cry right there. I said, what the hell is going on? Why is this man asking me if I'm a... He assumed me to be an assistant who was working in his company. And it took me a lot of determination to actually go back into that room and, tell him that, look, I'm the person who's come to pitch to you. I'm the owner of this company, and I want you to use my planes. When I did do that, he turned around and he said, "Beta, aap cupcake karo, boutique kholo, ye plane vein aapke bas ka hai?" And I was zapped, because I was brought up in a way, and I went to boarding school, and I never knew there to be any prevalent difference between being a man and a woman. I never thought of myself as a woman in a male-dominated industry. But I think that was the first slap on my face, which taught me a lot. And I made it my goal to make sure that he only flies Jet Set Go from that day. And it happened, and he became one of our biggest champions, and he's one of our most supportive customers today. And that taught me one thing. I said, I don't want any other woman to go through what I had to go through on that, in that one sales pitch. So we have this policy where we try to put one woman in every cockpit. And when I tried doing that, I had a customer board the plane and called me and said, Kanika, you've made a cabin crew a pilot. I said, no, sir, she's a pilot. He said, nahi, aapne cabin crew ko cockpit mein bithaya hai. Literally in these words, in the same language. I said, no, sir, she's a pilot. He said, I'm not comfortable flying with her. Please, change the pilot. I said, well, I can, but it's going to take me 3 hours. So are you willing to wait? He said, no, okay, I'll go. When they landed, the cabin crew texted me saying, ma'am, he was reading the Hanuman Chalisa the entire flight. And it really freaked me out. I said, what sort of a human being is this? To my surprise, this man got out of the airport, got in the car, and he called me and said, Kanika, this is the best landing I've ever had. Then I called the cockpit again and I said, who landed? And it was the girl who landed. So I called him and said, you know what? The cabin crew landed the plane. And he was delighted, and we saw a decrease in breakage. We saw tires being, tires doing more landings. We saw lesser hard landings as we put more and more women in the cockpit. So there was science to back my decision also in the company. And from then on, it's been a journey, trying to get equal number of engineers, trying to get equal number of operations staff. But it's very hard in an environment like India where you try to, encourage and foster female entrepreneurship at a level beyond, or, foster female talent in the company above a certain level, because I think there's this conditioning that, girls can't be pilots, girls can't be engineers. India has the highest number of female pilots in the world, which is amazing, I think, by itself. But my director of engineering one day came up to me and said, ma'am, you can't have so many engineers, female engineers in the team. If you call them at 2 o'clock in the night because something's wrong with the plane, they'll say, no, my husband's not giving me permission. I said, well, that's the same thing you told me last Sunday when I asked you to come into work. You said your wife is screaming too much that you're going every Sunday to work. So what's the difference? So I think, it's very essential and crucial right now for every single entrepreneur, be it male, female, to not, build a gender diverse business because it's cool to do so, not fulfill, all the check marks of having a female board member on your board, but do it because you really believe in it, acknowledge and celebrate women for what they bring to the table, for the contribution they bring. And if you look at the new generation now, I mentor a lot of girls who are 16, 17, 21. For them, there's no glass ceiling. They talk about what rubbish. They said, what's the difference between me and that guy? It's our generation. I think we're the last lot of people who've really had to go through breaking these glass ceilings, clearing the paths. I don't think the next generation is really, forget affected. They don't even acknowledge that such a situation exists, which is amazing.
Great, great. Thank you so much, Kanika and Neeraj, for some lovely insights. I know we're short on time. So I'm just going to take the last 30 seconds and ask you guys for your key takeaways. You've got a lot of startup founders, and like we were talking, in the backstage, people is going to be the core and the heart of business in the next few years and for the years to come. So top takeaways for you as advice to the startup founders today when they're developing their people strategies. Maybe Neeraj, I'll start quickly with you, and we'll close it with Kanika.
So, we really believe, and we have been, trying really hard to live this every single day, that it's all about people, right? So if you look at our basically execution over the last 2-3 years, so even during the first COVID lockdown, second COVID lockdown, we didn't do any firing, right? And we didn't do any cost cuttings. And throughout the lockdown, the business was on absolute pause because there is a lot of stuff which happens on the ground. In spite of that, we kept paying full salaries. During the Delta wave, lockdown, we facilitated, I went to the board, and I still, till December 21, we had not done any brand marketing campaign, right? So we did our first brand marketing campaign only in 2022. So during the Delta wave lockdown, I went to the board and told the board that rather than spending money on the marketing side, right, I'll love to share it with the blue collar team members, because we have a lot of, team members who work in the field and who are blue collar, basically people. And we facilitated 3 months, 6 months, 9 months kind of advances for them. And we ended up waiving off everything. We have implemented ESOP for all, right? And early 2022, we facilitated $12 million ESOP buyback for everyone. And there is an amazing culture of, I would say the horizontal hierarchy, right? So no bossism, no one can shout on anyone. So very different kind of basically environment we are trying to provide to
everybody, not just the people in the corporate, right? So we are really trying to live by this philosophy that it's all about people. If you take care of your people well, then they will take care of the customers well, and automatically the business will be taken care of. And whatever you want to solve, be that efficiency, be that your gross margins, be that your customer experience, everything is finally to be taken care of by the people. So you have to take care of the people first. You have to be really upfront and honest with them, right? And you have to build a holistic environment for them. If you're working in that direction, then I think they will take care of the most of the things.
I couldn't agree more with Neeraj, and I'm just going to emphasize more on that. I think invest in your people, 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 and that's the tagline for every single founder to go by. You can have the best ideas, you can build the best softwares, you can have the best systems, you can build the best product. But if you don't have a team to back you, support you, be there for you, I'm sorry, you're bound to fail. And I think, if I had realized that much younger at my age, things would have been very different. But I'm glad I realize it now, and I'm very open to talking about it. So I always say that, people are your biggest assets. Don't look at that fancy office. Don't look at, doing things, like he said, if you invest in your people, you don't need to go invest in your marketing as much, because your people will do your marketing for you. Today, relationships, people, human values are the most important, and I always tell my team, if you're honest, ethical, and do not let your people down, there's absolutely nothing in the world that can stop you from achieving what you set out to. Thank you.
Great. Thank you so much, Neeraj and Kanika, for your time.
Thank you.
We might have been short on time, but definitely not short on insights. And thank you for being a lovely audience. Have a great evening ahead. Thank you.
Thank you. Thank you so much for a brilliant fireside discussion. May I humbly request Ritika to kindly felicitate our speakers. Kanika Tekriwal, founder and CEO, Jet Set Go Aviation Private Limited. Thank you so much, Kanika, for taking time out and joining us here today and sharing all your brilliant insights. Neeraj Singh, founder and CEO, Spinny. Thank you, Neeraj. And Ritika, this is a small token of love and appreciation for wonderfully moderating the session. Can we please have a group photo op? Thank you so much once again. Can we please hear a big hand for all our speakers and the wonderful moderator? So with that, ladies and gentlemen, before we proceed towards the next part, I know you all have been sitting here for quite some time now. So right now, we are going to do a very short energizer. I hope you all remember the ratio we did in the afternoon. Yes? Do we remember it? How many of you still remember that ratio? Please give me a raise of hand. Wow, 1 person, 2, 3, 4, 5, 6, 7. Fantastic. So right now, we are again going to create something using that. So may I request everyone to kindly stand up, please, everybody. Can we all stand up? I hope you remember the ratio. You all have been sitting here for quite some time now. That's why I'm making you all stand. Alrighty. So earlier, we made that ratio using our hands. Then we tapped. And now we're going to tap again, but not on the table, but this time on our thighs. All right, so this is a small energizer. Let's do it, and then we can continue with our next session. On the count of 3, 2, 1. Again, 2, 4, 2 ratio. 1, 2, 1, 2, 3, 4, 1, 2. Can we do that? Yes. All right, on the count of 3, 2, 1, go with both your hands. 1, 2, 1, 2, 3, 4, 1, 2. Both your hands, both your hands. 1, 2, 1, 2, 3, 4, 1, 2. One more time. 1, 2, 1, 2, 3, 4, 1, 2. Let's do it. 1, 2, 1, 2, 3, 4, 1, 2. Fabulous. Now everybody put your hands together like this. And for the one last time, let's do it by clapping on the count of 3, 2, 1. 1, 2, 1, 2, 3, 4, 1, 2. One more time. 1, 2, 1, 2, 3, 4, 1, 2. Fabulous. Do you know what? When we clap, our body release happy hormones, feel-good hormones called oxytocin, dopamine, and we feel really good. So we want all of you to be extremely happy. That's why we keep having such energizers in between. Thank you so much for giving us your time. Everybody, please be seated. Well, we have a really interesting panel discussion which is coming up next. And in this panel, we will be talking about collaboration, building block to a strong startup ecosystem. I think one of the previous speakers have left their phone on stage. In case you're looking for it, it's with me. I'm going to take it home now. All right. So for this panel discussion, I would humbly request our brilliant set of panelists joining us up on stage. Karthik Prabhakar, Managing Partner, Pure Capital. Sankalp Agrawal, Co-Founder and CEO, Travel Triangle. Let's keep rolling our hands together as we welcome our panelists. Amit Ramani, Founder and CEO, Office Space Solutions. Kavish Kothari, Principal 8 Roads Ventures. Swati Arora, Director Sales, Slack India. And this session will be moderated by Sai Dio, Partner, Bain and Company. Handing it over to Sai now.
Thank you. Good evening, everyone, and thank you for staying on. I know it's a little bit late relative to our original timing. The session today is about collaboration as a set of building blocks for the startup ecosystem. I'm honored and privileged to be introducing a couple of eminent speakers on the panel today. We have Karthik, who is the MD at Pure Capital. He spent more than a decade in the investing space in India, previously at Chirite in a leadership position as well. We have Swati on the panel as well. She's a director at Slack India and leads account management. She spent several years at Citi as well as Expedia before that, with a lot of experience in the B2B space. We have Kavish from 8 Roads Capital. He's an investor in the technology space. Again, spent more than a decade investing in India and looking at consumer tech, fintech, and SaaS platforms. We have Amit from Office, and who's spending a lot of time building real estate and collaborative working spaces for the startup ecosystem in India. And finally, we have Sankalp, who was the co-founder of Travel Triangle and today works at Bright Champs. All of these eminent personalities have spent a lot of time thinking about collaboration tools and the B2B SaaS space more broadly, or the B2B collaboration space more broadly. And as all of us know, I mean, collaboration is key to any successful company to begin with, but it becomes even more important when you think about it from a startup perspective, because the teams need to operate more effectively, more efficiently, faster. It enables better team cohesion. So really keen to kind of hear insights from this group on how they think about the collaboration space going forward, and specifically what it means for the Indian startup ecosystem. So I'm going to kick it off with Swati to begin with. Swati, you're leading the what is the poster child of startup communication globally. Slack is loved and adored by startups globally. It is the collaboration suite that most startups love to use. They have been pioneers of the product-led growth movement globally and in India. Curious to understand, what has your experience been in terms of Slack adoption in India? Are you seeing interesting trends in terms of how it is being adopted in the mid-market, in the SME market? Any interesting trends would be great to hear from you.
Sure. Thanks. Firstly, great job in really remembering all the profiles. But yeah, glad to be here, and I lead the commercial sales for Slack. So honestly, any ecosystem where we have so many startups in the same room is pretty much my favorite place to be. Because I think Slack has had so much love from this community right since its launch, right since we even had our first salesperson in India 2 years back. We had more than 5,000 companies already using Slack. So it's been an amazing journey, and the love and the loyalty that we've seen from this segment continues to grow. And this is occasions like these are for us to really be standing in support, be cheering for all the winners and all these startup founders who are doing such amazing job at building these companies. So yeah, I think just to begin with what our role has been in the startup ecosystem and in this market in general in India. So I mean, collaboration I think is a kind of a smaller or a limited word on the role that Slack plays, right? Collaboration is where you get people together, whether it is internally inside your organization or outside your organization, to achieve the same goal, which is absolutely something that a tool like Slack should do. But when you really understand what Slack does, I think I'm going to introduce a new term. So what Slack essentially does is Slack is the productivity platform for each of these startups, which means that they don't just talk on Slack, but all their tools and processes sit within Slack. For example, you have a user just reporting error on your app that you have on Twitter, and your Twitter feed is connected to Slack. Somebody in customer service team picks that up, passes on the feedback to product and tech team, which is already developing, testing bugs, releasing, all in Slack, because all of their tools, Zendesk, Jira, everything is integrated into Slack. So if you really look at the entire journey of 360, the amount of productivity that is being generated and how fast it makes the processes, it kind of becomes the productivity hub. And I think in addition to that, something that most startups struggle with, as I hear from when we meet clients is, the pace at which these companies grow means that there is so much knowledge and context which gets created. It is almost impossible to track what was the discussion that happened 3 months ago on a client pitch, and how can we reuse some of that for something that is on the table now. So there is that knowledge hub creation that most startups struggle with, because you can never put a man effort on that. So when you combine both of these, I think Slack becomes a nerve center where everything sits and works for these organizations. And I think just the cherry on the top, something that we are absolutely proud of is the scalability part of it. Most startups that we have today, more than 80% of unicorns in India use Slack. And all these associations started when they were 3 or 4 employees, right? We have scaled with them from 3 employee to a 4,000 or a 10,000 employee organization, which means we've stuck to their short-term goals of wanting to go to market faster, but also long-term goals, right? Data security, engagement culture, all those things don't need to wait till you attain a certain goal or attain a certain size. They can be part of your DNA from day one. So that's what Slack does for you. It's productivity and scalability, if I can say.
That's a great point, Swati. Actually, picking up on the productivity, scalability, and the fact that most Indian unicorns use Slack, as you said. Maybe this question is to you, Karthik. Taking an investor lens to it, there are global giants like Microsoft, Google Meet, and Slack, Salesforce now that dominate this market not only globally but also in India. Are you seeing need for, or are you seeing companies that are trying to address this problem from an India-centric lens? And if yes, anything that would be interesting to hear from, not only from a communication perspective, but also, Asana board, Trello boards, would be great to hear.
Sure. No, thank you very much. Very quickly jumping into that point, I think if we just broaden the horizon and not just communication, right? See, ultimately, from a time where things were more like, we're building the Uber of X or the Airbnb of Y. Even right from the days when the startup ecosystem started to kind of build and thrive in India, the search engine of India was always Google, and the collaboration platform or the video kind of thing was always a Zoom or now a Teams and Google Meets. So I think just trying to emulate and solve for the same need, purely saying that there are a few India-centric elements, I think the market is far evolved from there. The need has to be very, very specific. And in fact, the market has moved to an extent where it has to be something which may be starting from India, but has to be globally relevant. That's where the market is. And if I take, a few examples, the way possibly teams work and collaborate in an Indian environment is possibly a lot more collegial, and I would say I think the remote work was never a thing, even pre-COVID in India, whereas it was a norm in some of the developed markets. And hence the need for engaging and working together is always a need, which potentially is also a need globally. And companies like, these are startups, companies like Airmeet, which not necessarily just collaboration, but try to kind of make sure that when you're engaging your team itself in a town hall, it's not just a Zoom call, but it's a more engaged two-way communication. Or another very small startup which I had invested a couple of years ago called Good Meetings, which again is an innovation to say that when salespeople are actually engaging with customers, how do we make sure that what the salespeople are doing, the headquarters or the sales head is able to coach and collaborate to make sure that the sales representative is successful. I think some of those nuances, which is not necessarily just India-centric, but an innovation which is starting here but has to be globally relevant very, very soon. Because there are enough people innovating on that space even in other markets. I think it's more, in short, I would say there is a huge talent pool which is innovating. There's no dearth for new innovation needed, and there's always a need for something new which is required. The key is to see whether it's a feature, and there are so many things which are already existing, and how do you build into a platform which is meaningful enough. There, that opportunity continues to be there. But possibly it's India for the world story rather than just India for India story.
Thank you, Karthik. Maybe taking a slightly contrarian perspective there, Kavish, Swati, do you guys believe that there is maybe a segment of the market that is looking for a Bharat-specific or a more inclusive, more vernacular, more linked with local communication applications? Are there segments in India where a very specialized solution could work? It, to Karthik's point, may not be the global leader like the Microsofts of the world, and that's a separate segment, but do you believe that there is an opportunity in the Bharat opportunity?
I can start, and what Karthik mentioned was quite relevant, right? There is always a lot of talent in India building good software for not only India, but for the global markets. And as investors, Karthik and I have actually been on an asset which does that for the global markets. India is a unique market, right? You just don't have large enterprises, you have small SMBs, you have small retailers. And if you actually break the market down, there is a very large majority of people who are employed not by a very large enterprise or who can afford a Microsoft 365 or sometimes even Slack for that matter. But they need to collaborate a lot more with individuals in their organization, outside their organization. Some part of outside organizations solved by platforms which are solving this customer experience on WhatsApp. There's a company called Zoop we had met recently. But the internal collaboration, whether it's a team of 10 people or 100 people, is still done manually, either through an Excel, it's done through phone calls, through voice notes actually. Rather than even messages, voice notes are a very large part of India. So there is a unique opportunity of creating a collaboration tool which is made for the Indian market and which can extend to Southeast Asia, because when you look at India, we're a mobile first and probably a mobile only country. We are not going to go to desktop, we're not going to go to a tablet. And a large number of our workforce is on the ground, is traveling many a times. If you can create something which can enhance the productivity at a price which is affordable in India, there is a very large opportunity. And the price part is important in my mind, because software in India has not been the easiest sale for Indian customers. So if you can think of bundling this with a fintech offering or with an enterprise tech offering which involves some more capitalization of expenses can be done by the enterprise and given to the software provider, then there's a chance of creating successful business models for India. And this can easily go to Southeast Asia, Middle East, and probably even to the US at some point of time. But I do expect there to be innovation there. And again, to Karthik's point, there are a lot of good, talented individuals here. And there are a lot of these problems which is solved for a larger enterprise. So it's about fitting it for the right end customer and giving them a good platform to communicate and collaborate on. But so I think in case you want to add something.
I think I'll just make it quick, and Kavish and Karthik already spoke. I think that's undeniable that there is a vast opportunity in terms of Bharat from a user base perspective. Honestly, even if you look at Slack user base, I think it's the third largest user base in the world. So so India is very, very high in terms of that opportunity. And I think at times you need that level of specialization or kind of customization to deal with that. So I think how we have dealt with that is basically, Slack as a product is fairly open and extensible, which means that it can integrate with 2,600 applications absolutely out of the box. Just pick it up and you can integrate. And whether it is an integration with a translator which will help you speak in Hindi or an integration with a third-party integration with WhatsApp, it kind of works seamlessly till you build a scale where you are able to put it into a product charter at a global level to say that, yeah, this is monetizable, this makes business case. At the end of the day, it needs to make a business case, right? So I think the opportunity is there, but till then, I think the platform works for us. And I think, I mean, if there is one thing that I personally feel very proud of is the fact that we, in some way, have been part of almost every important revolution that is touching Bharat in India, right? You talk about fintech, you talk about health, you talk about agri, and you talk about education. We've partnered with Paytm, Razorpay, Freecharge, and so many other players in health tech education as well. And we've been part of that to take those solutions to the last, although we may not have been the tool of choice from a last mile perspective, but I think it's the integrations at play for sure.
Got it, got it. Maybe if we switch tags from software to the more physical collaboration, Amit, this question is for you, but also, Karthik, Kavish, feel free to add. What have you seen physical collaboration or being in, the same spaces, allowing for more integrated, more engaging office spaces is a key part of enabling startups to grow well. And also do that at a relatively manageable from a cost perspective. Are you seeing opportunities from the way office manage spaces? Are you seeing opportunities from tier 2 cities kind of engaging better with employees in metro cities, or alternatively seeing enterprises in tier 2 cities being able to access opportunities in metros better?
So Sai, glad to be here. I think obviously, I think clearly the world moved when COVID hit from almost 45% of people using collaboration tools to about 80% of people using collaboration tools. But, and it was a scary thought that if everybody started working from home, then what would happen to our business, right? Now, clearly we believe that, the virtual world will not override the physical world. So people would need a physical connect at some point or the other. And the idea was to be able to provide that at a scale and at a point where people could look at this as we call it co-working as a service, right? Essentially, you should be able to use it for an hour, you should be use it for a day, or you should be able to use for the consumption period that you need. And for that, one needed a network. So today, obviously, with having 150 centers across 17 cities, we are able to provide that. Second, I think clearly for the startup ecosystem, I think there are 2-3 things that become very critical that we have solved for. One, obviously, the startup ecosystem only wants to pay for what they use, right? So it's almost a pay-per-use model, which we have clearly been able to deliver. Second, they want to be able to scale up or scale down on the fly, right? There's uncertainty in every business. And then thirdly, they need to be able to have amenities and an ability to feel part of a larger community, right? And I think that's exactly what we are able to solve for them. So a lot of companies that today come to our centers I would say there are 2,200 companies today in our centers, and a majority of them today are able to get that extended ecosystem which they would not be able to afford on their own, be it through a community, be it through a collaboration, and be it through the ability to scale or scale down. Now coming to the tier 2 network, I think one of the very interesting stats was that the 50% of India workforce went back to 8 metro cities, 8 tier 2 cities, right? And these are the tier 2 cities which are now going to become the next frontier, we believe. We have obviously we are on all of those cities today. But I think the urbanization will drive the 7 metro cities to have the maximum amount of startup ecosystem thriving, even though 50% of the startups today exist in tier 1, tier 2 and tier 3 cities. I think it will be a while before they are able to, their aspiration is always to come into the first tier metro cities. So clearly I think we see a move towards tier 2 cities, but the strength will continue to be in tier 1 metros.
Just linking to that, Sankalp, to you, the availability of collaboration tools and enabling hybrid work, have you seen changes in how people travel? For example, are there more vacations, or are people picking locations where there is Wi-Fi so they can work from there? Any trends from a travel perspective?
So there are multiple trends. So the first wave was pretty much the remote work, right, which happened after COVID. So that wave created a wave where people were going on trips while working, right? One city, multiple days, then going to next city multiple days, and there were a really large number of our friends and everyone around, right, who was doing that that regime, and they were just enjoying their life and working as well, right? So that was the first wave which created a lot of workations, and then teams were also going out to from New Delhi to Kerala to work and then come back, right? So all of that happened. Then now the wave has bifurcated into 2 parts. One is office joining back wave, right? But collaboration tools have enabled the employees of those companies to do 3 more things which was not possible pre-COVID. The first thing is going back to the family for festivals, right? So it was very difficult to take leaves intermittently and then enjoy your festival as well. Now this has changed a lot with the collaboration tool, because you can just work it out, and there are a lot of, you can be part of all the groups which are working in the office while you are at home. So that is one. Second is if you see that from the company's perspective, the workforce is not working for full hours, right? So 2 days in a week or 3 days in a week. And also a lot of companies don't have their large amount of workforce even working from the office, which leaves, for example, in case of sales, large ability of the organization to give better sales incentives. And in the sales incentives, we have seen previously that people want to give, trips for Thailand, trips for various Goa trips, right, as the larger incentive to do that. So that is the second wave which has come in. And the third wave is as the teams are sitting in remote areas in different cities, right? So the collaboration is needed. People want the human touch. While the organizations are saving much more on their fixed cost, they are fine to, invite everyone up into a single city or an outing or, an offsite where people come together once in a quarter. They spend time together, think out, brainstorm, and then they go back to their places into execution. So these are the 3 trends which have coupled up along with the wave 2, where the office joining wave is there. There's some remote work, some come back to the office work, right? So these are the waves which are out there.
Got it. I know time is short a little bit, but it's been incredible hearing from all of you, and thank you for sharing. And I hope all of you enjoyed the conversation as well, and have a lovely evening. Thank you very much, everyone. Thank you.
Much for such a wonderful session. May I now request Sai to kindly felicitate all the panelists. Thank you so much for sharing all your valuable insights with us. Ladies and gentlemen, please put your hands together one more time for Karthik Prabhakar, Managing Partner, Peer Capital, Sankalp Agrawal, Co-founder and CEO, Travel Triangle, Amit Ramani, Founder and CEO, Office Space Solutions, Kavish Kothari, Principal, 8 Roads Ventures, Swati Arora, Director, Sales, Slack, India. Thank you so much for sharing your valuable insights with us and enlightening all our delegates. And Sai, It's a token of appreciation and gratitude from Mint. Thank you so much for spearheading this session so wonderfully. Can we all please come together and take a group picture? Thank you. Much appreciated. Thank you. Thank you so much once again, ladies and gentlemen. Let's give a big hand for the wonderful panel. Thank you. Well, ladies and gentlemen, do you know that the world is very curious to know that where you at? What all experiences have you been gathering? So please make sure to tweet live with us. Use the hashtag #MintStartupIcon 2023. And please do not forget to tag us at LiveMint. With that, we will take a short break here for the next 15 minutes. Well, the tea and coffee is currently being served in Rajbagh. When you take an exit from this ballroom, you have to take a right, and straight up is Rajbagh lawn. Thank you so much once again. We'll see you in next 15 minutes for another fireside chat session and the awards ceremony. Ladies and gentlemen, right after 15 minutes, we will see you for the much awaited part of day for the Mint Startup Icon Awards 2023. With that, Check. 1, 2. Ladies and gentlemen, we are about to resume with our next part. I would request everyone who is standing outside in the pre-function area to kindly join us back here in the ballroom as we are about to resume with a very interesting fireside chat that is coming up, followed by Mint Startup Icon Awards. I would request everyone who is outside in the pre-function area to kindly join us back here in the ballroom and kindly occupy your seat. Thank you so much. Check. 1. Ladies and gentlemen, welcome back to Mint Startup Icons Summit and Awards 2023. We really hope that you all had your cup of tea and coffee and are feeling much more energized, much more rejuvenated. Well, on that note, we have another fiery fireside chat coming up. So for the same, I would request our expert speaker to kindly join us up on stage. Let's put our hands together for Ronnie Screwvala, co-founder and chairperson, Upgrad. And our moderator for the same would be Srutijit KK, editor-in-chief, Mint. Over to you, Srutijit.
More name tags than we need on the stage right now. Good evening, everyone. Welcome back. Delighted to be here in conversation with Ronnie Screwvala, one of the OGs, as the kids these days call it, the original greats. As I was telling some of my colleagues earlier today, I couldn't be more delighted that today we've had two really original entrepreneurs and two iconic entrepreneurs with us throughout the day. Sanjeev, as you heard, Mr. Bikhchandani was here in the morning, and Ronnie is here with us this evening. So I mentioned this to Sanjeev, that Ronnie is coming later this evening and I couldn't be happier, etc. And he said, So a long time ago when I was with Lintas, and I was 23 years old or something of that sort, Ronnie was the CEO of a media company, and Lintas they sent me to do some negotiations with him. And man, he negotiated the hell out of me, And I think the reason entrepreneurs like Ronnie are so inspiring is that, he has been incorrigible as an entrepreneur. He's a pioneer of the media industry, started, cable companies. He operated a toothbrush company at one point, tasted tremendous success with UTV, has given us as producer so many of the Bollywood movies that we love. Does tremendous amounts of philanthropic work, and has now got into a very exciting sector that I hope to speak to him more about today, which is EdTech, as chairman of Upgrad. Ronnie, firstly, it's hard to be an entrepreneur, as everybody in this room knows, any given point in time. What has kept you going, and what makes you want to start up again and again and again, despite tasting whatever material success one might want?
Well, firstly, good evening, and thanks for having me here. You know, that's a broad enough question. I think what keeps me going is pretty much what got me going maybe 20, 30 years ago when I started up on that, right? Because I think for everyone in this room, you can feel the energy. When do you feel positive energy? When everyone is really wanting to make a difference and make a change. So I think for the first 5, 7 years, I come from a lower middle class background. And so for me, the ability to not raise funds or take bank loans, I think was such a big challenge. And I think today it's almost like a sense of entitlement. But I would say on an ongoing basis, you're making a difference. For about a year in between, when I divested UTV, which I had founded, to the Walt Disney Company, and I had an option to do 1 year or 5 years. And at the end of 1 year, I went to Bob Iger, who's the CEO of Disney, and I said, you know, I started as an entrepreneur, and when my dad asked me why, I said, I just don't feel I'm going to be able to execute on somebody else's vision. And I'm saying at the end of this 1 year, you give me a great collaborative effort, but I still feel I need to go out and implement my own vision. And I think that's what gets me every day. And I think the diversity with which I think I do what I do creates impact. And I think that's the fun part of it. Most important, you need to enjoy what you do.
Ronnie, you know, as tends to happen with many legendary entrepreneurs, I think a lot of, you know, when we research the early stages of your career, sometimes it's hard to distinguish myth from fact. So I'm going to ask you, since we have you here, you know, people say things like that, you know, you used to do the cable wiring yourself when you started the cable company. You've sold videotapes, you know. Can you tell us a little bit more about your early days? And
I think that's what we all do best, right? I think today you're still the traveling salesperson when you're an entrepreneur. So I think, yes, my first ever business was to start cable TV in India at a time when there wasn't cable TV in India. And I can tell you that for the first 1 year, we didn't get a single subscriber.
For a whole year?
For a whole year. And I would say many people said, I told you so, and a lot of people, the first 30 people that one kind of employed, I had to go meet their parents to convince them to let their son or daughter work in this company. And that's, I guess, how nascent it is. And today, when people talk about recruitment, I'm saying when you put those kind of benchmarks that you've grown up with, then you know that recruitment, choosing people, is going to be a very different cup of cake. But I think at that very early stage, it taught me 3 things. One, you've got to stay the course, right? And there'll be many naysayers who'll say, second, it could be that you are before your time, and it's a very small sliver between being pioneering and being before your time. And the third one is, at any given stage as a leader, you need to be open to doing everything. So yes, you're absolutely right. I've had doors banged on me, and I think my best consumer lessons were going out there and trying to sell a concept, and they'd say, you know, come back at 9 p.m. I'm busy. And then when you go back at 9 p.m. says, you can't ring the doorbell this late. And then you go back again and go out and sell the same concept that says you have only one channel called Doordarshan, but I'm going to give you a second channel. And I think that learning today in 2023 is equally relevant for all of us here, that we need to be very, very multifaceted if we really want to make a change. I think people think of capital as the first stop. I look at capital as the 5th stop. There's so much ahead of it that will make you grow that's very important.
Ronnie, you're from a generation of entrepreneurs who had to, I mean, who lived or died by the bottom line. I mean, you had to make your own cash flow, right? And now you operate in a very different environment where you can spend venture capital to gain market share, you have a lot of staying power and so on. When you look at entrepreneurs today, including many in this room this evening, what is the attitudinal shift that you see? And is it appropriate, I mean, to recognize that today the environment is different, it is okay to spend venture money to grow and capture market share?
So I have to be absolutely blunt. Maybe what represents everyone in this room is that 5% of entrepreneurs, because that's the mindset where with that, whether we like it or not, I'll be brutally sharp, comes a sense of entitlement, comes the sense that I'm going to raise. The 95%, and some of them may be in this room also, are the people who are actually going to make a business regardless of that. Because when you go out there with the benchmark of raising capital, and I know being a unicorn is a very aspirational thing, but if you're asking me that, if that's a goalpost, then we're all in trouble. If you ask me personally, It's fantastic that India has 125 unicorns. Personally, I think only 50 will be there 4 years from now. That's my prediction, and I'm not saying it in any, because of the simple reason that it's come at a time when it was zero cost of capital to raise it. So I think we get carried away by saying, I'm a unicorn. No, I'm saying 4 investors who had a lot of dry powder and money made you a unicorn. Now, you need to go out and build a business. And I think if you understand that differentiator, you'll understand a lot that's what's going on. And I think that's representative of that. But if you meet the real entrepreneur, and I work in rural India, I work with a lot of people in the impact sector, they don't have a conversation that talks about profitability because they have to make ends meet from day one. And I think that's a good principle. That doesn't mean you need to be profitable on day one. Service companies, we all accept that when you started something in manufacturing, it was always went to the asset part of your balance sheet, and then you depreciate it over 10 years. And here, whatever you spend is expensed. But it needs to have a road to profitability. There's no question about that. And I think this zero revenue concept sale of, I think if you look at 20, 30 unicorns, they've come in with sub-zero revenue and that model. Very difficult for that environment. So we need to be cautious because tipping the den and running, it's worse to be pulled down from up there than getting up there.
Ronnie, you went from running, very sort of close to earth, brick and mortar business like cable TV. And then you sort of moved up the value chain and started creating media software or media content. Take us through the thinking behind that, number one, and tell us a little bit about, everybody loves Bollywood and everybody loves the glamour side of the business. Tell us a little bit about your days as a producer, as a movie producer, and how is it similar to being an entrepreneur?
So I think when we started off to do a media company, there was no definition called media and entertainment. I think it was, again, production. But I think there were 2 things I was obsessed with at that very early stage. One wanted to have a very integrated approach to what one wanted to build. And I think scale was an obsession that I wanted to do. And I think for the first 7, 8 years, we got badgered because my definition was, and when we finally actually divested to Walt Disney, we had 10 broadcast channels. We had a movie studio, which I know is the high profileness of it, but it was not more than 25% of our revenue. We had an animation studio, we had a production studio, and we had a content. But for that 8 years before that, everyone is saying, where's your focus? And I said, look, if you really want to create something of value, you can't just be only in content. You can't be only in that. So I think we stuck with our 2 principles that scale is going to be important if you want to unlock value. And when you're starting an industry and being part of a market making, it's very, very tough. And you need to stay the course on that. And I think those 2 models worked well for us. When we moved from B2B, and I could, for the first time, raise money in media, because for the first 7 years I couldn't, it was all B2B. It was all cost plus. And when we did in that context, it was a great journey. But you can't really build a brand with a B2B company in media. So to me, moving and starting a movie studio and our own broadcast channels was what I would say the part of it. And I think today, even today, I think after, we've done about 84 movies in UTV, and then I moved out after I sold. For 5 years, I had a non-compete. And today, I do it more as a hobby. And we've done Uri, and all the other ones have come from the new label, which is RSVP. But to me, it's a passion project. And I like it because when you're doing a business, 60% of the time, you do something that you have to do, and 40% what you want to do. And I think when you're doing something which is a passion, 99% of the time, you should do what you want to do, and 1% is what you have to do. So I think the power today of saying no when you're doing a passion project versus not the power to say no has been it. But at every given stage, I have to say that our first 5 movies were a complete disaster. From our 2 investors, including Warburg Pincus, who was there, and my CFO came and said, we've got to get out of this. You have no idea because you're an outsider. You've got no connections here. Let's get out of there. And then movies like Rang De Basanti, Lakshya, Swades were the first turning point. But to me, I learned an important lesson that if you can't beat them, for God's sake, don't join them. And therefore, if you're the outsider, behave like the outsider. And I think today when people ask me when I moved into education and learning and skilling, what's the core competence? And I'm saying that is the real core competence that happens there. You don't need to have had the domain expertise if you have the open-mindedness.
Sorry, a quick housekeeping request. Ved, could you send a message backstage? There is a lot of noise.
Yeah, that's the three waiters there who think there's dinner being served anyway. I think.
Yeah. All right. I would love to talk more about movies, but given the time constraints, I want to talk about EdTech. Firstly, why EdTech?
Yeah, first, well, if I had to describe Upgrad, I would say we're a learning, skilling, and workforce development company. And I'm caveating that with a little bit of light sense of humor because, firstly, I think the EdTech has got a really bad name because of a few self-proclaimed leaders in the field that in the K-12 segment, we're in the higher education segment who say they're some of the largest companies. So I think EdTech in the last 1 to 1.5 years has got I would say, unfortunately, a bit of an embarrassing connotation to it. For me, when I wanted to move into the next innings of what I wanted to do, I think there's a big difference between doing a second act and doing a second innings. And the reason I explained that is because I could have done media all over again, but that was not something that I wanted to do. And my first criteria was I want to do something different. I found education to be highly impactful, very ready for disruptive change, and something that I want to do for the next 15 years. I think what I brought to the industry in my mind was my ability to understand consumers, because in media you can't succeed unless you preempt trends, you respect research, and you respect consumers. So that was my one bringing. The second one is storytelling is at the heart of what I do in media. And I think today in learning and education, storytelling is also equally important. Because if you remember your college days or whatever else, it's that two professors that really taught you in an interesting manner. It's the case studies that you impress. And I think third, scale and brand were the two things that I think can disrupt any sector. That's what I thought I brought to the table. And I tried my hand at being a private equity investor for about 6 months. And I have to say, it was very good. And I'm very happy with some of the investments we made, including Lenskart, and I work very closely with the founder and a few of them. But to me, it was like, I needed to go back to do what I wanted to do, because if I sit down with a founder and have a conversation and be an investor, and if we have a conversation and if he takes 6 of my 10 ideas, I know I'm in trouble, because actually then who's doing the thinking around here? So therefore, it's not really yours, and I wanted to start all over again. And to me, the entire skilling revolution that's happening just around the world was very, very exciting.
You know, the model that one sees more often is someone, runs a business, gets an exit, gets some capital, then they don't prefer to go back to the rough and tumble of operating. I mean, I know you still have some, some distance from operating, but nonetheless, you chose to not continue just sort of spreading capital around.
I think it's mythical. I think it's mythical when people say, firstly, I think nobody plans an exit. In 2012, when I did the exit, it was a bad word. And I want to tell you, till Flipkart and some of the other happened in 2015, 16, at that time it was called abandonment. So I don't think I got any brownie points from everyone there. Second, I think it's mythical that if once you move out of something, that actually you hang your boots. Nobody really hangs their boots. I think it's a very small honeymoon period where you feel you want to do. And I think the third one for a lot of people here, I would say, if you're planning an exit, you're not going to get value. Because an exit can only be if it's a situation that happens where somebody else has come with a proposition. The minute you have a timetable and you want to exit, I can guarantee you it's going to be at 1/4 the value versus when somebody comes to you. Because it's pre-planned, it's premeditated, and it's got a big problem. So I get very worried when people say, I'm going to build this for 4 years and exit. Because my first question to them is, so I'm a little confused. Who are you building this company for? I mean, whose vision are you putting in there? You're preempting 4 years from now an esoteric possible investor or a company that's going to buy you out, and you're going to build the company for the next 4 years on that vision, because otherwise it's not going to work out any other way.
Ronnie, you alluded to what's happening in the edtech sector and perhaps your disenchantment with some of the trends. Can you talk us through a little bit more of that? We know there is trouble in the sector. How do you see this panning out, and can Indian edtech companies have a profitable, sustainable future?
Yeah, I think firstly, I don't think there's any trouble. I think in the higher education space, you're seeing very clear outcomes, impact, and ROI. I think some of the problems that are being faced are in the K-12 sector, number one. Two, it's because companies raise money at zero cost of capital and then spent them. I don't want to get into names in that context. So yes, that has created a very dark shadow. And when you've got somebody with 70 people on their cap table, and then more of that happening, it's a bit of a challenge. So I would say that's given definitely a bad name. It's an uphill task for people. But I think at that stage, you just go out and do what your convictions are and what you want to do. And absolutely, this is the sector. India is one of the largest markets now for being a learning capital in the world. Whether we like it or not, our next 200 million jobs are not going to come from job opportunities. People are going to have to reskill. The whole world is actually looking at India. So it's really unfortunate when the whole world is looking at India in two what I would call very good segments. One is learning and skilling, and the second one is care. I mean, I know people say healthcare, but to me, care as a sector is even bigger than healthcare. Because we're going to go from 8 billion to 10 billion in population around the world. And I think we're going to have an aging population around the world. And the opportunity that care as a sector, more than even healthcare, is going to be very important. And connected with that is we'll have to train a lot of people into an industry that is care. So to me, the vision is incredible. And I think a few funding quagmires that come in the way of one or two companies should not give this sector anything or any sleepless nights.
Ronnie, lastly, 3 things you look for in an entrepreneur when somebody pitches you for investments, etc., and 3 pieces of advice for founders.
Yeah, I hate these 3 and 3, but let me try on that. I think
we love lists, you know.
I think attitude and approach is very important. Number one, when you're looking at. Second, I think people look at people and say, I want to find problem solvers. And I think I'm looking more for problem identifiers, because I think problem solving is overrated. I think if people can preempt a problem, I'd rather work with that entrepreneur, because that's what I've lived by. The main point is how are you going to avoid the trends rather than figuring out. Most people think I need to be a problem solver. No, I think you need to be a problem preempter. So I think that would be the second one. So attitude and problem preempting. I think if I had to go with what really works, it will only be from my personal experience. And I think my personal experience, 2 things are very clear. You've got to stick it out. You've got to stay the course. And I think for everyone who says, oh, but you exited the media, I want to say that I was there for 15 to 20 years. 4,000 media entrepreneurs came, a lot of them packed up. So I would say I had a much longer innings in media than most other people, but only if people remember the exit. And so there is no shortcut to success. It comes from a lot of failures and from sticking it out. So if you're making a deal with yourself that I'm in this for 3 years or 4 years, don't do it, because it's not going to work there. And I can guarantee you, all glory is fleeting. And therefore, when we go into the celebration of popping a bubble when you're a unicorn, please understand that you're now at a place where 4 people put you in that place. Take the credit, celebrate the moment, but watch out that from there onwards, it's going to be even more tougher to justify your existence.
All glory is fleeting. Great takeaway. Ronnie, it's been delightful. Thank you so much for joining us this evening. Ladies and gentlemen, a round of applause for Ronnie Screwvala.
Yes. Srutajit, may I request you to kindly honor Ronnie with a token of appreciation and gratitude. Thank you so much, Ronnie, for taking time out and sharing all your valuable insights with us. Thank you. Thank you so much, gentlemen, once again for such an informative and engaging discussion. With this, ladies and gentlemen, we are officially concluding the Mint Startup Icon Summit and proceeding towards the much-awaited part, that is the most prestigious Mint Startup Icon Awards 2023. So are we all excited for it? Yes. Can we hear aloud? Yes. Are we excited? Show it to me by putting your hands together. Wow. Thank you so much. Well, tonight we are going to reward and recognize the most innovative startups who have disrupted the industry with their unique ideas and excellence. But before we proceed towards that, we would sincerely like to thank our respected jury members for their time, effort, and expertise in evaluating the top performers. And in order to felicitate our jury members, I would humbly request Shrutijit to kindly join us back on the stage. Let's put our hands together for our wonderful jury. May I request Nupur Garg, founder, WinPE, to kindly join us up on stage. Shrutijit, may I request you to please join us here to felicitate our jury members. And let's keep our hands rolling for Jay Rupani, Chief Investment Officer, Dinesh, Hinduja Family Office. Well, Jay is currently not here with us in the room. Thank you so much, Nupur, for joining us here. May I also request Shivani Bhasin Sachdeva, founder and CEO, India Alternatives, to kindly join us up on the stage. And let's put our hands together for Shanti Mohan, founder, Let's Venture, Kunal Behel, co-founder, Snapdeal and Titan Capital, and Satish Chandra, partner, True North. Once again, a big thanks to you, Nupur, and Shivani, thank you so much once again for coming over. Shrutijit, may I request you to kindly felicitate our jury? Thank you so much, Shivani and Nupur, once again, for all your time, for all your efforts, for all your expertise in evaluating our best performers. Shrutijit, over to you.
Well, we went through a fairly rigorous process in selecting the winners this evening. We kept a lot of things in mind, but ultimately, a lot of parameters in mind, but ultimately it was left to the jury to pick from among the shortlist that our research teams put together. Could you say a couple of words about what you found compelling in the startups that you reviewed, and what did you look for in picking the winners?
I think it was a very, very difficult task because there were so many incredible companies that came up. So I think the first thing I want to say is that while, a huge celebration and huge congratulations to the winners, I think equal congratulations to everyone that came in. So I think I want to highlight that. The other point that I will make is that we had a long discussion with several factors, not just one, where we looked at things varying from, value proposition to where the company has arrived, to resilience, unit economics. That's just one of, a few of the points that we looked at. But it was exhaustive, and we had a good deliberation. In some cases, we all sort of quickly agreed. In other cases, we had different opinions, but we ended up with a consensus. So it was an exhaustive process, and thanks to the Mint team, I think they had done a terrific job in terms of the research up front. And my takeaway is it was a very difficult job for the jury because everybody was so terrific.
Thanks, Shivani. And I think very few things that I want to add to it, but I just want to reiterate the fact that it wasn't an obvious choice for either the Mint team or for the jury. There was a tremendous amount of data that was provided to us, and we really appreciated that. And I think the other thing I really appreciated was the fact that it was a very open discussion. And for a couple of categories, we actually went back to the drawing board to reevaluate how we were shortlisting. So it was a very robust and a very open discussion. It wasn't easy to get consensus, but we got there. And like Shivani said, huge congratulations to the winners. But to those who are not getting the award today, you were as good. So all the best to everyone.
Thank you also to the jury members who couldn't be here this evening, and our wonderful jury members who are here this evening will be back very soon to give away some of the awards this evening. Thank you.
Thank you. Thank you so much once again. I would sincerely like to express my gratitude towards the entire jury for being so thorough during the entire evaluation process. So with that, now to tell us more about the award nomination process, may I humbly request Shalil Gupta, Business Head, Mosaic Digital, to kindly join us up on the stage. Over to you, Shalil.
Can we have the slides, please? So guys, I think, okay. So guys, I think overwhelming nominations came across. I think voluntarily we got almost 300 plus nominations. Then we took help of editorial to get the nominations. We took help of our research team to get the nominations. And if you look at the stage one, there was a lot of research done in terms of collecting data, what startups are doing, which space they belong to, how they have been growing, what kind of customers they have, what kind of investments they have done, what the profile of the founders are, and so. Then we shortlisted around 63 nominations, which were presented to the jury members, and we selected 14 winners today. But I must say, I mean, everybody was a winner, because it was a very troublesome discussion which I was having with the jury member, and they were asking questions from us, and we were sometimes able to answer, sometimes we said, we'll come back to you with a lot of more research to be done. So it took us a couple of rounds of discussion to get to a final winner, and these are the categories. Stage is best late stage startup, best new startup, best high value startup, and the sectors fintech. I think we introduced D2C as a segment there. EdTech, travel and mobility, SaaS, emerging new sectors, which is basically we're calling it a breakthrough. And thematic, we will give an award to a best woman entrepreneur and a best founder and a CEO. So that was the sort of an icon award process being followed across. The next slide. Just to give you, what jury member was talking about, it was an extensive research which we have done across 4 broad parameters. One was the performance matrices, I think how the organization is growing from last couple of years, including customer experience, CSAT, NPS scores, etc. So this was, let me tell you, a lot of founders gave us this information, and we have this information which we can present to the jury members. The team and board, I think the founders, co-founders, CTOs, etc., what was the constitution of the team, and what is the board members doing within the organization. I think that was very important. So we had both. Then we have business scalability. So offers, products, service, we were talking about that. The business model clearly articulated. And in fact, has strong potential to scale in a foreseeable future. Because in our data, we were looking at almost comparing it to sector growth perspective as well. And what is the opportunity lie for an organization from a market perspective. The last one was competitive differentiation and how they have created a competitive differentiation, which is sustainable, using that on a scale of 1 to 5, and the weightages were given to the parameters there. So I think, when jury member was saying that it was very difficult, because most of the startups which we're nominating, which are coming us across, have done a tremendous amount of job in actually qualifying for all the 4 parameters. So thank you for this. I can't say much. I would say, I think 2008, 2007, I was hearing Amitabh Kant saying that we had 400 startups. And I think today, it's 96,000 startups in the country today. Please give very big hand to our country to let it born to almost 96,000 startups. With this, thank you very much, guys. Thank you very much.
Thank you. Thank you so much, Shalil, for beautifully explaining the entire nomination process. With that, ladies and gentlemen, we are proceeding towards the most prestigious Mint Startup Icon Awards 2023. Let's have some excitement in the room. Let's have some energy in the room. And we will maintain this throughout the awards ceremony. Now, to present our first set of awards, may I humbly request Ronnie to once again join us up on the stage. Ladies and gentlemen, let's give it up for Ronnie Screwvala, co-founder and chairperson, Upgrad. Thank you. Thank you so much. Ronnie, I would request you kindly stand in the middle of the stage. Yes, thank you. With that, ladies and gentlemen, our first category is Breakthrough category. And the winner in this category is, let's have a look.
This is a tech-enabled platform that lets students search, compare, book secure housing near universities, assisted over 2 million students in realizing education dream abroad, has facilitated over 1.75 million plus beds in 35,000 plus properties across 300 plus global cities, and has crossed the 300 million USD GMV mark since its inception. And the winner is University Living Accommodation Private Limited. Congratulations!
Ladies and gentlemen, let's hear it for University Living Accommodation Private Limited. I would request their founder and CEO, Saurabh, to kindly... Let's keep the claps rolling, everybody. Come on. Let's keep the claps rolling. Congratulations. Heartiest. So Saurabh, how are you feeling upon winning this? We would love to hear from you.
So, I'm not that articulated, and I'm a bit shivering also, but, I was sitting and I was thinking that award milta to hai nahi, but this time we got it. Of course, we got few awards, right? And the best part, I was telling outside someone that this is actually, I say we earn it. There are many awards we all know in the industry, and I'm absolutely against those. I mean, it's an industry itself. Award is an industry itself, but really happy to got it from Ronnie. And I guess till 5 minutes, I was not sure what category we are getting in and what is the process. So thank you. Really mean it.
But congratulations to you that you have won it. And I think we can take one lesson from this, that we should always keep our hopes high. Yeah, congratulations to you, Saurabh. With that, ladies and gentlemen, our next category is again breakthrough category. And our winner is...
This startup is at the forefront of building a green world. It aims to collect over 8 million litre oil, which will save 19.3 million kg carbon dioxide emissions by 2025. It collects used cooking oils and fats from restaurants and pays them the better price. Then it converts those oils into biodiesel. They are addressing a $5 billion market opportunity with social impact. And the winner is KNP Arises Green Energy Private Limited, eCoil. Congratulations!
Ladies and gentlemen, let's hear it for KNP Arises Green Energy Private Limited, eCoil. I would request their founder, Sushil Vaishnav, and their co-founder, Kirti Vaishnav, to kindly join us up on the stage. And let's give a big hand for KNP Arises Green Energy Private Limited. Congratulations to both of you upon winning the most prestigious Mint Startup Icon Award. Can we please take a picture with all three of you together? Fabulous. Thank you. And Sushil and Kirti, we would love to hear from you that what's the feeling right now? You have won the award. Please, over to you.
Yay! That's the feeling. Honestly, हम लोग वहाँ बैठ के डिस्कस कर रहे थे, काश हमारा नंबर आ जाए और मतलब काश हमें ये अपॉर्चुनिटी मिल जाए, काश मतलब और yesterday we were in गोवा और हमें ये इस सेरेमनी का हमें पता था कि यहाँ पे नॉमिनेशंस हैं, क्या पता कुछ अपॉर्चुनिटी हो एंड जैसे भगवान कभी भी कोई मौका देता है ना, छोड़ना नहीं, कोशिश तो करो. तो we just thought कि चलो आते हैं. अच्छा, one more thing, just हम लोगों का जो बिजनेस है, हम लोग खाने का जला हुआ जो तेल होता है, जहाँ से भी रेस्टोरेंट किचन से निकल जाता है, उसको कलेक्ट करते हैं, उसका बायोफ्यूल बनाते हैं. रिसेंटली शेल ऑल्सो इन्वेस्टेड इन आवर कंपनी. नाउ वी आर कन्वर्टिंग द एविएशन फ्यूल्स आउट ऑफ इट एंड वी आर सेविंग द हेल्थ एंड एनवायरमेंट बोथ फॉर एवरीवन. थैंक यू.
And kudos for the amazing job. And I think we all should believe in the power of manifestation. You manifested this award and you have won it. Congratulations to both of you. With that, ladies and gentlemen, our next category is D2C. And let's have a look at the winner in this category.
This startup has witnessed a growth in revenue at 240% CAGR the last 2 years, has maintained its position as India's #1 smartwatch brand for 10 quarters. They have highest market share among Indian smartwatch brands. They are the only Indian brand amongst the top 5 brands selling wireless earphones in India. And the winner is Nextbase Marketing Private Limited, Noise.
Let's make some noise for Noise. Congratulations to you, Nextbase Marketing Private Limited. I would request their communications lead, Nimisha Prasad, to kindly join us up on the stage, along with the other team members of Noise. Can we please have a big hand for Nextbase Marketing Private Limited? Congratulations. Congratulations to you guys. Wow, where's the energy gone? Where are the claps gone? Nimisha, would you like to share your feelings, your thoughts right now upon winning this?
I would just like to say, it's a pleasure to receive this award on behalf of our co-founders, Mr. Amit Khatri and Gaurav Khatri. And I would like to thank the jury and the entire team here for this felicitation. Thank you.
Thank you so much. Very lovely. With that, ladies and gentlemen, Ronnie, we would request you to kindly stay back for one more award. So please, thank you so much. So with that, ladies and gentlemen, our next category is travel and mobility. And the winner in this category is none other than...
This startup is India's first all-electric shared smart mobility platform. They have made it to LinkedIn's top 25 startups list for 2021 and 2022. They have saved 4,300 plus tons of carbon dioxide emissions, over 1.8 million rides in Delhi NCR as of July 2022. They have 1.4 million plus app downloads across Android and iOS store, serving 110K plus rides every month. And the winner is Blue Smart Mobility Private Limited. Congratulations!
Congratulations to you, Blue Smart Mobility Private Limited. Let's welcome their strategy and planning head on the stage, Shivam Khattar. Congratulations to you. Can we please put our hands together louder for Blue Smart Mobility Private Limited. Shivam, would you like to say a few words? Would you like to share your feelings, your thoughts, how you're feeling upon winning this?
It's an exhilarating feeling. This is a testament to the efforts that we have been putting in decarbonizing mobility and electrification of fleets all across the country. Thank you so much for providing us this opportunity and this award. Thank you.
Thank you so much and congratulations to you. Thank you so much, Ronnie, for joining us here. With this, ladies and gentlemen, to present the next set of awards, I would humbly request Shivani Bhasin Sachdeva, founder and CEO, India Alternatives, to kindly join us up on the stage. Thank you so much, Shivani, for coming over. With this, ladies and gentlemen, our next category of awards is EdTech. And the winner in this category is, let's have a look.
This startup is the 101st unicorn company of India. They have crossed over 8.7 million plus unique sign-ups and is continuously raising its bar in the field of education. It has been downloaded more than 10 million times as of January 2023. It offers 90% content at free of cost. And the winner is Physics Wala Private Limited. Congratulations!
Congratulations to you, Physics Wala Private Limited. I would request their Chief of Staff, Gaurav Guleria, to kindly join us up on the stage. Congratulations to you. Ladies and gentlemen, let's hear a big hand for Physics Wala Private Limited. And Gaurav, over to you now. Please share thoughts.
It's a great pleasure to receive this on behalf of my team. And thank you. I would like to thank you, Mint, for considering us for this award. And hope many more to come.
Absolutely.
Thank you. Thank you.
Keep up the good work, and it's always the team effort. Thank you so much for mentioning that, Gaurav. On that note, ladies and gentlemen, our next category of awards is SaaS category. And the winner in this category is, let's have a look.
This startup is a leading big data and AI company enabling enterprises to accelerate revenue. They are witnessing rapidly growing users and transactions with a total of 130 billion plus total portfolio spends and 2.9 billion plus transactions analyzed. They ensure 4x response rate over traditional analytics. They cover 18% of India's credit card market and are expected to touch 44% by 2026. And the winner is Crayon Data Private Limited. Congratulations!
Congratulations to Crayon Data Private Limited. I would request their Chief Business Officer, Mr. Ajoy Krishnamurthy, to kindly join us up on the stage. Congratulations to you.
Congratulations!
Congratulations to you, Sharport Services Private Limited. I would would request Supriya Munshi, Senior VP B2B Business International, to kindly join us up on the stage and collect this award. Congratulations. Can we please take a picture with both of you together? Wow, ladies and gentlemen, let's hear a big hand for the best new startup. Supriya, how are you feeling upon winning this most prestigious award in one of the best categories?
Thank you so much. It's an honor to be here. Thank you, Mint. Thank you, jury members. I'm accepting this award on behalf of the entire Resha Mandi family of 600 plus people, and of course the 1,25,000 stakeholders associated with us. It's because of the farmers, the weavers, the retailers that we just saw the numbers that we are here. And of course on behalf of Mayank and Saurabh, our founders, who actually conceptualized Resha Mandi. And yeah, it's just amazing to be part of this family. And yeah, thanks again. Thank you.
Thank you and congratulations to the entire team. Kudos. With that, ladies and gentlemen, our next category of award is Best Late Stage Startup. And the winner is...
This startup is a fast-growing digital tax compliance and regulatory reporting company. They serve over 100,000 customers nationwide, including 30,000 CPA firms. They offer solutions for everyone, from small businesses to the largest corporations. This brand has the portfolio growth rate of 45% per annum. And the winner is Zenwork Labs India Private Limited.
Congratulations!
Congratulations!
Zenwork Labs India Private Limited. I would request their VP Growth and Marketing, Pranav Kumar, to kindly join us up on the stage along with Naina Malviya. Ladies and gentlemen, let's hear a big hand for Zenwork Labs Digital India Private Limited. The best late stage startup. Congratulations to you. Wow, come on. Show us some energy, some good energies. Thank you. Over to you now.
Thank you. We are absolutely delighted. We are collecting this award on behalf of our Zenwork family. Yeah, our founder Sanjeev couldn't be here, but I think this sort of acknowledgement keeps us going to serve our customers better. Thank you so much, Mint, and thank you so much, juries, for facilitating this.
Very well said. We always need the reassurance that we are on the right path and that we are doing a great work. Congratulations to you and team once again. With this, ladies and gentlemen, our next category of award is Best High Value Startup. Let's have a look at the winner.
This startup is a new age B2B commerce and fintech startup providing financing to SMEs for all working capital needs through its tech-enabled platform. They largely earn their revenue from sale of traded goods and logistics charges. In financial year 2022, the company's total expenses grew 316% to 6,993 crores from 1,680 crores in financial year 2021. This company's financial year 2022 net profit balloon surged 3.6x year-on-year to 201 crore rupees. And the winner is OFB Tech Private Limited of Business.
Congratulations, OFB Tech Private Limited of Business. I would request their co-founder and CBO, Nitin Jain, to kindly join us up on the stage. Congratulations to you, Nitin, and the entire team. Ladies and gentlemen, let's give a big, big hand to them. Nitin, we would love to hear from you. How are you feeling upon winning this prestigious award? Over to you.
Yeah, no, thank you so much. And this is testament to what 1,500 of our family, we call them OFBNs, has put in all their hard work. And, I just saw the word tech-enabled. I think next time when we are on stage, it should say tech first, because we are using the power of technology and AI now in B2B, which is sort of unheard of. So yeah, I'm very, very happy and glad for the future, and it's India's decade.
Wow, love the spirit there. Congratulations to you and team once again. And thank you so much, Nupur, for joining us here to present the awards. Now to present the next category of awards, may I humbly request Shrutijit KK, Editor-in-Chief, Mint, to kindly join us up on the stage. A very warm welcome to you, Shrutijit, once again. Come on, ladies and gentlemen, let's keep the claps rolling. With this, our next category of award is Best Founder or CEO.
These founders are college friends and MBA graduates and founded the company in 2018 with an aim to educate and spread awareness on dietary supplements in the public. Together, they have taken their brand across 7+ countries. They are on a mission to bring the purest Himalayan-grown nutrition to the masses. This startup has already served 1 million+ satisfied customers with 120+ vegan products within 2.5 years of its inception. And the award for Best Founder CEO goes to Vaibhav Raghuvanshi and Sudhiti Sharma from Himalayan Organics. Congratulations!
Congratulations to you, Vaibhav. Well, since Vaibhav is not currently here, so I would humbly request Sumetha from Mosaic Digital to kindly collect this award on his behalf. Any which way, ladies and gentlemen, let's give a big hand, big cheer for Vaibhav Raghuvanshi from Himalayan Organics. Thank you so much, Sumetha. Yes, absolutely. With that, ladies and gentlemen, our next category of award is Best Woman Entrepreneur. And the winner in this category is, let's have a look.
This founder started the sustainable e-commerce platform Brown Living in November 2019, offering eco-friendly products from clothes to cleaning supplies. This startup aims to provide a sustainable way of living which is zero waste and plastic free. They save around 2 lakh kgs plastic every year. And the Best Woman Entrepreneur Award goes to Chetsi Ahuja from Living Brown Private Limited. Congratulations!
Chetsi, ladies and gentlemen, let's give it up for her. Chetsi Ahuja, founder and CEO, Living Brown Private Limited, or what we call as Brown Living. Chetsi, I am sure you would be feeling a little overwhelmed right now upon winning this award. So please, we would love to hear from you.
I want to thank the entire Mint team, the entire jury. I want to share a little story that I started my career in events. And I did my first event in the same hotel. I did a brand launch for Nilaya. And I'm honored to be here again 10 years later and receive this award. And I think the idea for Brown Living was to make sustainability mainstream. And getting this award really puts us on the map of India. And I'm really, really proud. I'm going to thank all the warriors. That's our team of 10 people. And all our sellers, 450 of them who've made this possible. Thank you.
Would you like to say something? Wow, that's really inspiring, Chetsi. Keep up the good work, keep shining bright, and congratulations to you once again. Thank you so much, Shrutijit, for joining us here. Thank you. With this, ladies and gentlemen, we have come to an official end of Mint Startup Icon Awards 2023, but the awards ceremony is not over yet. We have a few more awards to go. And to present the same, I would humbly request Astha Juneja from Mosaic Digital to kindly join us on the stage. Let's give a very warm welcome as Astha joins us here. Thank you so much, Astha. Please stand in the middle. With this, ladies and gentlemen, our next award is Best Customer Retention Marketing, and it goes to...
This startup is Digital First House of Brands for Food, operating India-wide through a network of tech-powered cloud kitchens. They have recorded 89.1 crore rupees in revenue from operations during the fiscal year ending March 2022 from 1.96 crore rupees during the fiscal year that ended in March 2021. They are the second largest cloud kitchen player in India in terms of footprint. They have over 150 cloud kitchens across 15 cities and aim to open 50 more kitchens in 2023. They own brands like Eat Fit, Aligarh House Biryani, Masala Box and Cake Zone. And the winner is Cure Food India Private Limited. Congratulations!
Congratulations to you, Cure Foods India Private Limited, but their executives are currently not here with us. So once again, I would request Sumedha from Mosaic Digital to kindly join us here on the stage and collect this award on their behalf. Ladies and gentlemen, any which way, let's keep our hands rolling for Cure Foods India Private Limited. The Best Customer Retention Marketing Award goes to them. Come on, let's give a big, big hand to Cure Foods. Thank you so much, Sumedha. With that, ladies and gentlemen, another award in the same category of Best Customer Retention Marketing goes to...
This startup is a B2B e-commerce marketplace for Indian pharmacies. They serve 100 plus tier 2 to 5 small towns in South India. They have more than 12,000 outlets and 2,000 doctors prescribing them. They are valued at $50 million as of 2022. They have witnessed 11x growth in their monthly revenue from 1 crore rupees in March 21 to 11 crore rupees in January 22. And the winner is Savio Healthcare Private Limited. Congratulations!
Congratulations, Savio Healthcare Private Limited. I would request Amit Kesel and their data lead to kindly join us here. Congratulations to you. Ladies and gentlemen, once again, let's hear a big hand for Savio Healthcare Private Limited. So Amit, before you leave from here, a few words from you, please.
Yeah, I'm very happy. Thanks to all the Savio team. This is the result of their hard work, so congratulations.
And congratulations to you. Thank you so much, Astha, for joining us here. With this, ladies and gentlemen, we have officially come towards the end of Mint Startup Icon Awards 2023. Once again, let's hear a big hand for all the winners. Heartiest congratulations to all of you. And now to officially conclude this evening, before we move on to the picture session, may I humbly request Shalil to kindly join us back on the stage and conclude it with his vote of thanks. Over to you, Shalil.
Thank you. So guys, I have another 140 slides to go. Is that okay with everybody? Just say yes or no. How many people saying yes? Nobody is saying yes, guys. Okay, first of all, I want to thank my partners. We have WebEngage, Samsung, Slack, we have HPE as a presenting partner today. All of these partners partnered with us to make this happen today. I think please give a big hand to them as well. I think second, I would like to thank my jury. I think I struggled a lot, let me tell you. But they were hell-bent on certain data points, certain research to be done, and the best choices to be made. I think you have seen some of the choices people wouldn't have assumed. They were the unassuming startups, I would call it, which became a winner today. And they are making a big social impact as well while they're making a business. I think please give a big hand to the jury members being with us here and going through the process. I think this is not a big hand, this is a very small hand you're giving. I think the third, I would like to thank a lot of speakers, right from Sanjeev Bikhchandani. I think he's an ideal for most of the people in this room today. With Ronnie Screwvala at the end, I think we have so many people coming on stage, sharing the viewpoints, and we actually proved it that it is not a winter today, okay? It has nothing to do with winter, it has nothing to do with funding, it is now bright, sunny summer, and we had some drizzle in the afternoon today as well. So it's a great weather, guys. And I think we should definitely thank to all our speakers for making an effort to be here with us. Please give a big hand to them. Second last, I think everybody should thank yourself being here, your time, precious time for being with us today, from afternoon to evening. I think nothing better can I ask. I think I can't give you the time back. I can give everything else back, but time is something which I can't give you back. It's an honor for me, for you people to be here. Please give a big hand to yourself, guys, for being with us. And lastly, I would like to thank my team, guys. Just raise your hand wherever you are. I think all of this experience which you're having it today is because of the great teamwork as we work, as we go through. And I think we will have dinner and drinks together. With this, thank you very much for giving this opportunity.
Thank you so much, Shalil, for such a kind, for such a warm thank you note. With this, ladies and gentlemen, we have officially come to an end of this knowledge-packed day. We sincerely hope that you have managed to gather some really valuable insights from all the panel discussions and sessions that have taken place here. Before we break from here, we would sincerely like to thank once again all our sponsors who have made this event possible. Let's hear a big hand one more time for our presenting partner, Hewlett Packard Enterprise and Intel. Come on. Mobility partners, Samsung and Microsoft, thank you so much for all your support. Our attention partner, WebEngage. Our session partners, Alibaba Cloud and Slack. Please do not forget to fill the feedback form that is right there at your table. You can also scan the QR code, which is again there at your table itself. On that note, I would like to call all the awardees, all the winners on the stage for a group photo op. Can we please have you all here along with your awards? Let's mark this moment in our memories forever. Let's etch this moment in our memories. Can we please have all the winners, all the awardees on the stage? Along with your awards. Yes, fabulous. Please do join us here. Ladies and gentlemen, let's keep our claps rolling and congratulate all the winners upon winning the prestigious Mint Startup Icon Award 2023. All the winners who are currently present here and can hear us, please do join us. Ma'am, please join us on the stage. Ladies and gentlemen, make sure that you all remain seated because there are a couple of hygiene announcements that I would like to make, so please be seated. With that, can we have some good smiles from you to the camera? Let's show our awards. Let's give a big cheer. Yes! Wow! Fantastic. Okay, I think one more time we have one winner. Yeah, we need all the winners here because this will also be published in our magazine, in our print. So please, thank you so much. Congratulations to all of you. And with this, it's time for my 3 favorite words. The bar is open. Please to join us for drinks and cocktails that are being served in Alamgir. And the dinner will be served in this particular banquet hall, in this particular ballroom itself. So please make sure to have this scrumptious meal that is only being prepared for all of you. Please do join us for dinner and drinks. With this, thank you so much, ladies and gentlemen, for being such a lovely audience. This is your host, Namrata, signing off on behalf of Mint. Thank you.